Good morning. 8 o'clock Central Standard Time, 22nd of August, 2025. Fed Friday, baby. Welcome to my virtual journal. This is risk neutral trading is the basic philosophy here. So that's the theme, and that's what I stick to all day long. This is my virtual trading journal, and the reason I do that is because I believe journaling is important, but I don't multitask well. So for me to, I can capture everything I'm seeing on my screens in the video, and then my voice provides insight as to what I was thinking, and I can remain focused on the job at hand, which is not being an internet guru or a influencer, but a trader. Okay, so this is not for financial or trade advice. There's a disclaimer in the description here. Read that. Good idea. You can lose more than you started with. Anybody that doesn't know that, I guess, really needs to fall back and study a bit. The idea here is that it is my virtual journal again, so I'm talking to myself. When I use, say you or whatever in my narration or my voiceover, I'm talking to myself, and I'm allowing, or I'm welcome anybody to view it, or and hopefully it'll help. That's why I share it publicly. I stream it to YouTube because I am focused and vigilant about transparency and accountability. And if I stream to YouTube, I can review it on any device. I have a strong commitment, as I said, in the faith of transparency, or the effort of transparency. I have a strong commitment. I take no trades on this account off the stream, period. And that's why the stream lasts from 8 o'clock in the morning now until 1500 in the afternoon when the cash closes. Okay, I openly share all my thoughts and, win, lose, or draw, strategy, thinking behind the strategy, all that stuff. I don't believe that my trading or, anybody watching the stream would have an impact that would deteriorate the edge with such a large market. All right, so let's go to the 500-pound elephant in the room this morning. Are the numbers, eh? And there is the biggie. All eyes are on the Fed Powell speech at 9 o'clock. Then it's basically nothing after that. However, there is a new, we live in an environment of random risk where we don't know in advance often that something serious could happen. Some risk could disrupt the auction or the markets. And here is that. We've got the administration POTUS there making an announcement at 11 o'clock. So 9 and then 11, going to pretty much shoot the morning straight in the head. My expectations of a trade are way off the table for today, frankly, and I tell you why. You can't manage your risk, which is your primary directive as a trader, to manage and protect your account and you do that through risk management. You cannot manage your risk going into a huge number, non-farm, in the case of an unrecognized or a random risk, critical risk, somebody, some publicity hound in the administration that is going to come on and say something. So you really need to use extreme caution here, especially today. And I will also say that this week is, these last 2 weeks of August, seasonality-wise, are the weakest 2 weeks for trading in the year, second only to Christmas and then New Year, which are not in the same year, of course, but that's something to take note of. All right, so there we go. There's no earnings today. That's only starting again on Monday, and the biggie is going to be NVIDIA on Wednesday, and then the rest of it is not particularly market moving. NVIDIA, of course, is a $4.2 trillion market cap. Jesus. I can't even I can't visualize or get my head around what $1 trillion looks like. Anyway, these are my news feeds. This is investing.com. It's, I like it because it's concise, clear. You can filter it for just your time zone and just what you want. It has both earnings and economic calendar, plus other stuff that I don't ever look at. And it's free. It is the free version, let me put it that way. This is Financial Juice, which has a similar calendar over here, and then more of a squawk box feel on this side. And it is also free. All right? So let's zoom into the function at hand here, which is something. I don't know what's going on here now, but let's see. The pre-market, okay? This is IRT or investor.com, investor RT, not .com, sorry. This is my primary charting setup. These are Renko charts, market profile, my micro composite chart, higher time frame view. These are the mini ES on this tab, and when I also have the micros. Same exact setup. Those are naked volume points of control. So we're back to the micros. Well, it's the full session. So this was yesterday's RTH. Close. ETH. Boom. And then London comes in and takes it all back. So looks to me like market is pretty much, inventory is pretty much balanced. Big sell-off, took it all back. A little bit long because if you stop and imagine, realize that this negates this inventory-wise. And here we have this little burp above the open, and then we have this goes a little higher. So actually, the inventory may be a shade long in the overnight. How it compares to balancing out inventory from yesterday's trading session, I'm sure that figures into it. This is the NASDAQ mini, of course. This is the micro composite, which is my high time frame idea, view, whatever you want to call it. It is the RTH session only. These are daily candlesticks. And wherever price overlaps, I draw a volume profile around them. In so doing, that automatically generates a micro composite VPOC, volume profile, and then these red and green lines, which represent the high and low volume nodes of this current volume profile. All-time highs, irrational exuberance, big selling tail day before yesterday, inside bar, basically doji or whatever you call them. Yesterday, everybody knows what's going on. Look at the level of support across here, and guess where we were with these 2 days? Right across that whole thing. That's, they're trading the market, and they're suckering in retail people that can't restrain from trading, and they're making money, and they're loading up on inventory, all in advance of the speeches today. Now, the Trump thing is a new one that sprung on the market last night, but the Powell speech has been the headliner for the last at least week, months, perhaps. So there's that. And this is the market profile for the ES. We're green across the board. And that means, we're up 0.23% on the ES. And the way these colors change are simply the last price related to the settlement. That's it. Volume's really light, 116,000 all night. We trade that in 30 seconds at the open. So anyway, that's how it works. This green-red thing over here has got a real big psychological impact. Somebody figured that out and was clever on the retail squad, because all of the lightweight retail trading platforms, like Robinhood and all that kind of stuff, when all their screens flash red, they start selling, and when green, they start buying and whatever else. So that's something to keep an eye on, in my opinion. And of course, this is all in my opinion. This is Bookmap, which is my execution platform, and a few things I do here, but let's start from the beginning. This is the micro composite column where I enter the data that's important to me, the naked volume, points of control, etc., from my micro composite chart in IRT. My workflow is that when a level has been revisited, I change the text from whatever color it is to black. This column is the high and low volume nodes pushed from IRT. This is the full session volume profile, which started plotting at 1700 last night and will continue through 1600 today. It's Friday, so then it shuts down until 1700 on Sunday. This is the RTH volume profile, which will reset today. Fingers crossed that it's automatic, as it should be, at 0830 when the RTH session opens. And this is a real important column for me. This is my notes column, and the first thing I do, you'll see all the notes and statistics from yesterday. The first thing I do every morning, and I used to do this in the shutdown period, but I thought it was better to show this transparently to everybody as I clear the notes. Then I determine the open type, which I expect for the day, and I change the column title to that. And what I'm expecting today is higher in range. How in the world did the great Karnak determine that it was going to be higher in range? Real simple. First of all, there's only 4 open types: higher in range, higher out of range, higher in range, lower in range, lower out of range. I'll show you in a minute. Anyway, if we opened right here, right now, how would the open price compare to the previous RTH close and the previous RTH range? It would be higher than the close and in range. Boop, higher in range. The reason that's important is that dictates the specific statistics that I will enter here associated with these price levels. These are the session prices pushed automatically from IRT to Bookmap. Self-explanatory, but let's run through a few of them. You'll notice that there's no indicator on my Bookmap or IRT, typical like MACD, RSI, moving averages, that kind of stuff. The closest thing I have to indicators which are calculated are the VWAP. There's the Globex and there's the RTH, and that's volume weighted average price. Probably the biggies with the most important impact are the POCs. One is for the full session and one is for the RTH session. POC is nothing more. This line plots just to show you where the action has moved, but the POC itself is just a marker of the price at which the most contracts have traded so far in the session. That's it. Other levels that sometimes confuse people are the IB low and IB high. You'll see in this green line here indicates the IB high, And it happens to be right under the previous RTH high, because once we set that high in early in the session yesterday, we never revisited it. The IB is a acronym from the market profile days for initial balance. What these two levels really actually represent are the high and the low of the first 1 hour of the RTH trading session. That's it. Stand by. Ooh. I'm a loud sneezer, and I didn't want to deafen everybody here. All right, so with that in mind, and then the rest of the levels are simple. There's the, there's the VWAPs, as I said. There's the RTH mid. And then there are the price levels, just plain as day, and the abbreviated names. So let's jump over quickly and have a look at the statistics. They come from this study in IRT. Real simple. Nothing I do is magical, mystical, or anything. It's just simple, common sense, data-driven, probabilities and math. That's it. Okay. Here are the 4 open types. Yesterday, we opened lower end range, and IRT conveniently highlights the color of the correct open column after the open, obviously. So right now, it's not selected. This is still yesterday. So we're going to open higher end range. We just figured that out, didn't we? Okay. The study is very simple. It looks back at 2,000 days. Of these 2,000 days, we opened higher in range 604 of those days, 30.2%. Of these days where we opened higher in range, price revisited the overnight volume point of control 503 times, 83.3%. Overnight volume point of control, 83.3. That is just exactly, oops, helps if you get them aligned. That's just exactly how complicated it is. And then I just stepped down the list, right? And the next one is the overnight mid, and that's 77.0. Overnight mid. Oops, let's get the thing open here. There you go. God damn it. I got this wound down too tight, I guess. It doesn't want to be nice to me today. Causing trouble already. You must be angry at me. Okay. The next order of business is the overnight high for 75.0. And there's the overnight high. The previous value area high is 1.5 value area high. Come on, man, what's going on here? Okay. And let's see, typically overnight low and then previous high and low are high on the hit parade. The previous close is 70.5. Get to some of the lower ones here. Here's one of the ones I wanted. The IB high is 68%. Now, we know that the IB high is living under the previous high because we never took it out after we once set it. So I'm going to put that stat in here. And that is, what did I say it was? 68%. And I always go like this. And why do I do that? Because, remember the definition of the IB high or low. The minute we open today's RTH session, this line and this flag are going to move to the high and low of the current, today's RTH session. So they will no longer be here or here. Therefore, I put the initial there so I remember, 2 hours from now when I don't go, what the hell was 68%? Now I know. The IB low is 62.1, so we'll smack that in there. That was a big number yesterday. That was down around the 70 handle, and that was, it hasn't changed much from today. That was a big number, and you notice where we got right there. Okay. What else are we doing here? POC, we got that previous high is 56.3. Well, that's already marked up here. And the previous low is 35.3. Now I'm going to stop with the, yeah, come on. Now let's get over there. Do this right. Karen, I should change it. I guess that's the new thing. Okay, I'm going to stop right there and get ready for a snap that I need to make for the TLab. But the statistics are not guaranteed levels. They are suggested. Remember, these are probabilities of the number of times price revisited this level, looking on a 2,000-day data set where we opened higher in range. However, that's pretty high percentage, isn't it? Wherever the other one went. Oh, the close in the mid. Where'd mid go? There you go. All right. So I'm gonna branch off now to the next order of business, which is the TLab snap. And what, you ask, is that? Well, first of all, remember I don't multitask well, so I'm going to do that snap first. And then I'm going to tell you what I'm doing. Maybe, if you're nice. Okay, the TLab is a bookmap Discord chat room called the Traders Lab by Tom B. Now, what is all of that? Well, first of all, it's a Discord, it's a bookmap Discord room, so you have to sign up for the bookmap Discord server, obviously, and then navigate to the Traders Lab -Tom B. And it is, first and foremost, completely free. You don't even have to be a subscriber to Bookmap, which is pretty amazing. As is obviously they're a marketing tool for them. And you are never solicited for anything in the Traders Lab. In other words, Tom or anybody else is trying to sell you anything. I think, first of all, Tom is a professional trader with plus 46 years of experience. And I believe has a genuine concern to help traders do better. Obviously, he's, it is the marketing tool for Bookmap. So there's an underlying current, Bookmap is cool and perfectly straight up, perfectly normal. But you're never, I don't have he's not trying to sell you a mentorship or some indicator on his website or any of that crap. You're never going to see, Tom doesn't trade live, nor does he call trades, first of all. But I promise you're never going to see a wrapped Lambo or a bunch of gold chains. I would fall over if that happened. And I believe that he's the real deal. After a few years and you get some miles on you, you can sort him out. And I believe that he is. Especially the fact that you're never solicited for anything. What's the ulterior motive? Maybe he owns Bookmap. I don't know, but you know what I'm getting at. Anyway, I can't make that recommendation for any other website really, and or any other Bookmap Discord chat room. First of all, because I have certainly not visited all of them. And second of all, the two others that I did visit were more normal. The guy was trying to sell something, second or third word out of their mouth. That's perfectly fine. if that's what they want to do. And that's more than fine if that's what Bookmap wants to support. But I'm not interested in it, and so I don't recommend it. I do 2 snaps in the TLab. One is the reports and numbers every morning, early around 6. And then I do this one to try to help the people there that don't have similar charting with all the numbers that they may need to make a decision for trading in the day. Naked volume, points of control, all the different several sessions back, etc. And I used to contribute a lot in there, be much more active. But I'm doing this stream now. So this is, and I don't think it's, as I said, I don't multitask well, so I try to stay focused here. But I very definitely, every day I make a point of putting that snap in and talking about it. So there we are. Next we're going to open here in 4 minutes. So it's pretty important to be able to trade, I guess, isn't it? And the way you do that with Bookmap is you have to activate the trade control panel by clicking this padlock. Then you have to decide or select which method you will use to trade with your mouse on the application. Chart, you can only trade the active data column. Dome, you can only trade the dome columns. Both, you can trade both. What a surprise, isn't it? Next thing I need to do is I trade with multi-brackets. And this is the risk-neutral trade management philosophy, hence the name of the channel. This is the smallest risk-neutral package you can have because you need to have an even number of contracts. In this case, 2. And then you select through, first of all, your account parameters, the risk reward and the risk parameters of your account and whatever else you got going on. You select the stop for the entire package. In this case, 12 ticks. Once these 2 are selected, that automatically dictates the risk neutral first scale profit target, T1, whatever you want to call it. It is for half of the package, and it's for the same number of ticks positively as the stop is negative. And then the balance are the runners. You can make it 4, and there you are, same thing, right? Easy peasy. What the beautiful part of this for me, psychologically and everything else, is once this first scale is achieved, the worst that can possibly happen to your trade is a scratch, because at this point you are, what is it? Risk neutral. There you go. I also use the multi-account trading thing, which takes this account and any actions that I do here, win, lose, or draw, and multiplies it across 4 others. Okay, we got about a minute and a half here. This is a TopStep evaluation account. My theory here is that with full transparency and accountability, stream and record this process from 0 to hero. So I'm 1 trade away, essentially, from passing the eval. Will be moving to the XFA, where the benefit of that trade copy thing works because you can be paid for the profit on each of those other evaluation accounts or XFA accounts. Obviously, when you go to a live account, it's only 1, so that drops away. They call that sim farming. The next thing I do, the last thing before we get ready to open here in 30 seconds, I confirm the package size. I close this again, gives me the real estate back. All the same data I'm interested in ticks is right here, plus cancel and close. All right. We're going to open here in 20 seconds. Ooh, let's fingers crossed, boys and girls, that this damn column resets automatically. It is so frustrating. Worked for years, and then all of a sudden, with an update or whatever, it just fell over, and it gives me trouble every morning, I think. And the next thing I'm thinking about doing is removing, even though I only have 3 other contracts up here, remove them, and maybe that's going to change something. And there we are. We're open, and we didn't reset. Magic. Let's see how many seconds it takes before it does so. Is it going to do so? That is so irritating. God damn. Sorry. Well, okay. Reset now then, you dumb shit. It's supposed to be automatic. The reset is set, it's configured in just like this one is, and it worked for years. I have no explanation for it. And now I will start plotting my migrating VPOCs, which is an OCD habit of mine from years gone by. Because I used to be scrolled in much more. This yellow line will continue to plot all day, but if you're scrolled into the market tighter view, the migrating POC will will jump off your chart to the left, right? Scroll off to the left. The next thing I do here that's important is I change my IRT charting to full day session only. And I do that for a reason. Both mini and micro. That keeps the value area high and low aligned and in proper sequence with the developing value area high and low. There we go. And I'll explain that right now. The developing value area high or low is for the current auction. The value area high or low represent the previous auction, and I want it to represent the previous RTH auction. Therefore, I changed those charts to day session only. Because I understand what's going on, but I push these levels and provide them freely to anybody that can use them. And a lot of people do in a couple of different areas, TLab and Static and whatever else. So if that would be helpful to you, drop something in the chat and I'll be happy to do that. And, and even if it wouldn't be helpful to you, drop something in the chat also. Now I'm going to try some, well, it looks like it's aligned itself, sort of. I was going to say, I don't want to do that, I don't think. Do I? Let's see what happens. Okay, is that correct or isn't it? God dang, that's frustrating to me. So I will continue to flag these VPOCs. Another thing that I do here back to my conversation about zoomed in and zoomed out. Now what I do, and I find it very helpful, is I put this vertical blue line at the session start of each session. And that is nothing more than a visual cue for me. If I can look out of the glance left or see in my peripheral vision this blue line over here, I know that I've got the entire session in range, which is what I have been doing lately. I think it was Rod that first mentioned that was a good idea. And anyway, therefore, I always have a full understanding and view of context for the session, which is really important. And these guys are going to be like crack times 3, in my opinion, today until 9 o'clock, which is going to be in, a few minutes here. And then all hell is going to go quiet. I would imagine the book's going to go, there are going to be crickets over here until that speech. And I'm certainly not going to do anything with it. And then I was looking forward to maybe a successful trade or two today until the Agent Orange and the random risk band are taking the stage at 11. So that's even more of a confusion. I try to keep this set at a point high as it is now, and make sure that the range is, or the session is always in range here in view. That's the new plan. You notice that the IB high is, what a coincidence. It's the high of this session, and the IB low, oh, I can't believe it. It's the low of the session so far. And these will continue to go up and down with price until 9:30 Central Standard Time, at which point the IB statistic will become active and they will not move anymore. We got quite a bit of liquidity living up here, considering at our 12 handle, previous RTH high, and also the previous IB high, of course. Yeah, okay, so I guess we're off to the races here. Let's see if I got my, I always forget sometimes in the evenings when I get busy. So these are the naked volume points of control, and we're going to flop over one of them here in a minute, and that's that one. Okay, and then we got one up here. These are the regular volume points of control, not the micro strategy or micro composite volume points of control. All right. And one, if you're curious, one other point, this black volume profile line here represents the granddaddy, all of the data. That is for, I'm on the wrong chart. Sorry about that. I'm on the MES. I didn't get back to the ES. This black volume profile here represents all of the data for the ES. In this case, it says U5, but obviously you know that it's a continuous contract because U5 is only for a quarter. Starting at October 20th, 2021. So that's all the data that I'm pulling in here for that. And here we are with our market profile. Yesterday was an inside day, balanced. Day before started out ripping and snorting and went directional big time. And then at the end, by the time the day was over, they traded it back to pretty much a balanced rotational day. Kind of surprising. What are we doing for volume so far? Let's look at that. 69% volume as of this average, compared to average at this time of day. Ooh, look at here. Holy smokes. The ATR is down at 2.75. Yesterday, around the open, it was at 10. My. What do you suppose they're doing? Everybody's sitting around waiting. They're going to pick each other's pockets or slap, grind up some retail. This is the harmonic rotations. I have not figured out how. My theory here is to analyze this and help determine the stop size on the brackets, on the on my risk neutral brackets, or to optimize them. But I haven't figured out how to use it exactly. So if somebody else knows that, let me know. Please, that would be great. Here we go. So now here is our day. This was yesterday. We've already gone up and exceeded the previous RTH high and the previous RTH IB high. And we put in a new IB high. And our flag has moved up there because that's where price has gone. And it is not 9:30 yet. Boom. However, we have just traded over this one, which was the previous naked volume point of control from the 20th. So I will do my workflow as an example and change the text to black because that's no longer a live level. It's been revisited. And real important to say here, oh, I didn't show you that. Sorry about that. This is the, there you go. Style, change the foreground color to black. You bet. There we are. Sorry about that. You can tell how professional I am. I can't remember to switch screens half the time. My focus is on the screens and what I'm doing and saying. Sorry. Low volume node up here. Okay. Now you can bet that the news readers or speech readers, I don't know how, this is an interesting question that I certainly don't know the answer to. I would suspect strongly that Powell's speech has been published in advance of the speech, but maybe not. I don't know that. That's an interesting question, huh? I mean, it's the keynote speech for the Jackson Hole Financial Symposium. So I would suppose that it's been published in advance, but maybe not. And the next question would be when. And maybe it's been published and these guys know that there's no hawkish wording in there, and that's why we're trading up. That was what prompted that whole idea. Or prompted my question there. The background thinking here is that depending on the economy, right now jobs are getting, the labor market is, every number that comes out, it's getting softer. And inflation's heating up. What a surprise. We're putting a big tariff on everything, an additional tax on all the American people, and which will restrict imports and generally business. Well, what's that mean? It means prices are going up and stuff, and business is slowing down, and that's inflation. The Fed has two mandates to try to stimulate full employment and prevent or control, contain, whatever, any kind of inflation on the economy and promote growth. So the entire market and everybody that, only cares about their wallet is concerned with the fact that they want a rate cut. That's the big thing, because they want cheaper money so they can keep this euphoria going, regardless of whether, the bulk of the population is suffering or not, I guess. Seems to me anyway. This is my opinion. Remember my journal, I'm talking to myself. So stepping back as a trader, what are, the whole purpose of this speech and all the stuff that went on with the minutes from July 2 days ago and yada, 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 and, PMI and PCP and CMI and all those numbers that come out every week. What is the expectation of the Feds cutting the rates? And the market has pretty much assumed that there will be a rate cut in September. And I guess what I understand the market would have been, participants were looking forward to in this speech would be any kind of hawkish commentary that would suggest that wasn't going to happen. It seems to be maybe more important that what is going to happen next year in terms of the rates. Boy, next year is going to be a real watershed moment for America in general. as if now is not. I mean, we just, the FBI is early morning raids on a former national security advisor's home. Justice Department is looking into a investigation into a Fed governor. If it were happening on the other side of the coin, I suppose there'd be a big hue and cry about weaponizing the Justice Department politically and stuff like that. But of course, in this environment, nobody will say anything like that. If it's against that, the thinking with the core group, it's fake news or rigged or whatever else, like the non-farm payroll numbers were supposedly at the beginning of August, to the point of immediate firing the director. And then the new guy that was appointed's first press conference is he's going to suspend putting out the number, which has been put out and relied on by the world since more or less 1905. It's a crazy time we're living in. And look at the market go. Aren't they excited? They are pretty sure that there's going to be a rate cut and everybody's happy. Maybe not. Maybe somebody said something. Obviously, my advice to myself here and anybody in earshot, your first prime directive as a trader is to preserve your account. And the way you do that is manage your risk. And that's what I'm going to do. Trade what you see. And remember that you're an adult. This BS about, I just overtrade, I can't control myself. The psychology of trading, that's just, childish gibberish. You are an adult. Be one. And just think about all the basic stuff you do as an adult that you don't even consider. It's like, yeah, well, I don't do that. I don't crap my pants. I'm an adult. I don't overtrade. I'm an adult. To me, it's exactly the same. To me, there's no difference. I don't have a lot of patience with that. And I have certainly, tried to, nobody is ever, you will never be able to eliminate your monkey mind and those emotions and things that have come down through years and millions of years, or however long, whatever you want to believe, of development and evolution. Those things kept us alive way back when. Fear, revenge, those kind of things work, but they don't work in trading absolutely at all. But you're never going to eliminate those emotions and those feelings. FOMO. That releases, dopamine. Well, overtrading can release dopamine and FOMO, adrenaline, and things like that. What I believe you need to do, and what I hope I do, is recognize when those emotions are being triggered, those chemicals, however, I'm not a, brain wizard here, and then don't react to them because they don't help you. I'm an adult. When I feel like I need to go to the bathroom, I don't just stand there in one place and do it in my trousers. I'm an adult. Same thing. It's exactly the same thing. I realize that may be a base and somewhat not, politically correct analogy, but it's just exactly the same thing in my mind. And if you think about it that way, you go, yeah, you're right. Jesus, that's stupid. I mean, you don't even question that. Obviously, the Brett Steenbachers of the world and all those psychologists that are making buttloads of money selling books want you to believe that and want you to believe how difficult it is for your trading emotion and trading mindset and all those kinds of things. That's BS and bus tickets as near as I can see. But that's just me. And I obviously don't have a problem with self-control or addiction or those kind of things. Knock wood, you know. At this point in the game, I'm pretty sure that I don't. I'm old enough to have had any of those things manifest years ago. So here we are, waiting for Uncle Jerome. 10 minutes. I don't know if I can... What am I doing now? Wrong window. Sorry about that. I don't know if I can... I don't know if I could legally stream, listen to that speech here because, well, in financial juice and I think also in, let's see, investing.com. No, I don't. Yeah, right here. You can click that and you're going to hear it. What's this? Here, Trump has gotten into the window here now. Earlier today, if you remember, this was not on investing.com. Now it is. So what I was going to say was, in both of those, you can click the link and get the speech live. I don't know, or maybe some delay, I guess. I don't know if it's legal for me to do that. YouTube has a lot of real strict rules about copyright and and all that stuff, which is perfectly fine. And that's why I use and pay for Epidemic Sound to be able to have the background music here, because I tried several places that, this is copyright free, blah, blah, blah. YouTube, absolutely not. You get a copyright strike and whatever else. So fortunately, I found Epidemic Sound, which is, you actually tell it the name of your site or your stream, and then they whitelist it. So there's no possibility for that. And think about this. Think about the complexity of the algorithm at YouTube. It is able to programmatically determine if I have some music playing in the background which has a copyright or royalty situation related to it. When it's processing the video, it knows it can determine that, and it puts a strike on your, or a copyright thing in your on your studio. VPOC migration, baby. Ooh, migrating up. My guess is the speech has been published and they've read it and they know that there's no hawkish, and boy, I wish I would get this figured out, that there's no hawkish verbiage in there, and that's why we're doing this. That's what I'm thinking. And I still haven't figured out what I want to do about trying to, I would be happy to stream this, no problem. But in any case, you can go to Financial Juice or Economic, investing.com. Click on the thing, as you see right here. You can click on that button. It'll open in YouTube, and you can monitor and watch live real time. That's probably the thing to do. All right, so that's over here. This is what I'm talking about. You can do it here, 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 any of those places. And I, probably a zillion other places too, but that's what I have access to here. Now, around this whole Fed speech thing, remember that as it says here on labor markets in transition, this is the theme of this year's Jackson Hole Symposium, which is not just our Fed. That's what they make a big thing about. Our Fed this, our Fed that, Powell this, Powell that. There are the economic heavyweights, scholars, and central bankers from all around the world attend this every year, and this is the theme of it. So his speech, and this is the keynote speech. So his, read the title. That doesn't say anything about rate cuts or anything, or what the Fed's mandate is. And that's what I expect the bulk, the theme of his speech to be. He's a normal, level-headed, intelligent guy, you know what I mean? And is certainly not a headline grabber or a random gunslinger. Okay. So there's that. Starting in 3 minutes. Now, this whole thing is going to put a damper on what I'm doing, because I am in the process now of vetting the IB trades, of which there are 2, so that I will have statistic probabilities and a vetted, which means you have, wait a second, trades in my playbook. Okay, vetting a trade or a setup means that you identify a setup. This is all, loops back to approaching trading as a business, not as a video game or gambling or, a lot of fun. And any of those things are fine if that's the way you approach trading. If you want to wear out a mouse a day just clicking that bad boy like you're killing snakes, that's completely up to you. And if that's what makes you feel good and is a lot of fun, go for it. Antonio, bon dia to the bang. Chef Powell. Chef Powell speech in 2 minutes. And then a surprise performance by Agent Orange over here at 11 o'clock, which has only just been added to the calendars here. Some announcement, some nondescript, tantalizing announcement. Who knows what. Anyway, back to what I was saying. So vetting a trade means you select something that you believe repeats frequently. A setup, perchance, in my case, it's the IB statistic, which is very well understood and very well known for years from the market profile days. And then you determine or identify the criteria that would qualify that statistic or that setup for an entry. And you capture via best ideally away from the live market with backtesting software or just going through your charts day by day, a statistically significant data set of that setup and those criteria, and determine if it has a positive edge or not, or expectancy or probability, or those words are interchangeable. If it does, then in the live market, the thinking goes, your job is to take that trade every time it presents itself. And you rely on the law of large numbers to manifest that percentage of edge or expectancy, which you determined with your math and statistics, to your bank account. And that's what I'm doing with the IB trades. Now, that's not this, to qualify this for sure, this is not some crap I dreamed up. Here we go. Oh, baby. Get there. Hello. Manage that risk, why don't you? If you're on the right side of that, you're a rock star. If you were thinking it was going to go short first, you got a real nasty, disappointed look on your face. Anyway, back to the point here. this is determined and identified by the best traders and hedge fund managers in the world. Jim Simmons, Paul Tudor Jones, Ray Dalio, Tom Sosnoff, Ed Thorpe. Just keep going. Go down the list. Pick out anybody that's a consistently, historically professional trader that's made a bunch of money, and listen to enough of their, interviews or whatever it is. Oh, Powell's first, Jesus Christ, his opening statement, shifting balance of risk may warrant adjusting policy. Wow. I wouldn't have expected that right out of the gate, but that's clear. Now, maybe it's not right out of the gate. As I was saying earlier, look at him go. As I was saying earlier, they have probably published the speech, and it, didn't take the newsreaders or whoever very long to go through it and figure that one out, I guess. Because I'm a little hard pressed to believe he took the microphone and that's the first word out of his mouth besides good morning, but maybe. And it sure had a positive effect. Wouldn't it have been nice to have been on the long side of that? I hope you were. Because you got 15 to 67, you got 50 handles there. Boom. In the blink of an eye. We took out the MCVPOC. We traded right up to that in the high volume node from the 17th. Interesting. So looping back to the, betting a trade. That's what I'm doing with the IB trades. There are two of those. One is the IB continuation and one is the IB failure. IB failure is a mean reversion. IB continuation, and that mean reversion is generally suggested by a directional day. No, I'm sorry. Rotational balance day. I'm watching the market. I shouldn't be doing this and talking. It's suggested by a rotational or balance day, and the IB continuation is suggested by a directional day. I hope I said those right for you. The reason I chose the IB trades is A, they're obvious as the nose on your face. No question about when that happens. Absolutely nothing to be done until 9:30. After that point, the statistic is hot, and then you can start looking for the trade. Number two, there are two of them. There's the failure and there's the continuation. So you have an option trade for either context, rotational or directional. That's where you're at. Now I'm going to stop babbling here and see what's going on. There's all kinds of things going on over here. Risk to the labor market is rising. Situation suggests downside risk to the unemployment are rising. Situation suggests downside risk to unemployment. This is all negative stuff to me. This means, well, wait a minute. Let me think about that. I'm sorry. Employment stuff is typically managed by the Fed and growth in rate easing, which is what they're looking for. Hot, the economy running hot and inflation and stuff is rising. That's where they would raise interest rates. So, I guess he finally got tired of Agent Orange bitching and moaning is gonna make him feel better right off the bat. I don't know if, like I said, playing this is a thing to do or not, but let's see what happens here.
68,000 per month during 2024. This slowdown is much larger than assessed.
So there he is speaking. Let me get my headset and see if we got it. Yeah, we do.
But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2%, and has been broadly stable over the past year.
Way too quiet though, isn't it?
Are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations, to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that
Well,
has accompanied
my
previous
system
efforts
seems to be
counter
tipping on
high
its head
inflation.
over here on
This
the
year's review
IRT
considered
side,
how
so I'm going to
economic
have
conditions have
to
evolved over the past 5
restart
years.
that.
During
Sorry
this
about
period,
that, but
we
like,
saw that the inflation situation
the
can change
speech
rapidly
continues, I
in the
think.
face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
Thank you very much. We'll move into the presentations. So I want to allow a minute for all of the members of the press to go.
All right. Well, that was a pretty interesting and, as always, well delivered and well thought speech. Like that guy. Anyway, so here we are, and of course, Trump can't stand anybody else having the spotlight. He's got to have several big statements in the middle of it to try to. I don't know. I really don't get it. He's going to speak about something at 11 o'clock, but it seems like he's already taken the podium or the microphone in some cases, and now he's decided that he's going to fire a Fed cook if she doesn't resign. For what reason? You know? what did she do? What has she been? What has been proven? It's really bizarre to me. Yeah. You know, TikTok. That's a big one for him, TikTok. Wow. Yeah, I don't know what to say or think, but anyway. All right. Well, that was a good speech, and now we'll see what happens with Captain Marvel there at the. Got big delays and lags going on with IRT here. What I'm going to do at this point, don't know why that's happening other than just too much load on my computer, which is amazing to me because this was about the most powerful one I could build when I built it 3 years ago, 4 now almost. About October of 21 when we moved here from Kuala Lumpur. So what I'm going to do is restart IRT quickly, and hopefully that'll reset the damn memory and whatever else will happen. You know, it's just not one to do anything right now. So there we go. We'll reset it and show them goddamn thing who's boss, huh? I'm pretty disappointed about the performance of this machine. So let your conscience be your guide there with what you do. This is a Intel i9 12900K processor with 64 gigs of DDR5 RAM and a 3060 NVIDIA RTX GPU with 12 gigs of RAM. And I thought that would be more than sufficient to run 2 programs. Well, in this case, now 3. So, yeah. Well, now IRT can't even shut itself down. It's having more problems than it can shake a stick at, I guess. It's plotting, okay? But it's got something balled up in the background. Frustratingly. I don't know what to think about that exactly. Maybe it would be a good idea to shut down some of this other stuff. I don't know. I don't expect things to give me trouble, you know. I expect things to work. I've never had a problem building machines that were pretty much top of the line when I got the stuff and built them, the components. I've not had quite the problem. Maybe this is a memory thing, issues or something. I don't know. I can't shut down IRT, though. That's pretty interesting. Well, needless to say, back to the stream. Fortunately, we've got book mapping, and we've got the stream trickling down the hill. So it seems to me like we're pretty much on track. I have been talking about vetting the IB trades, and where are we now? Well, we're just going to cross over the 9:30 hour in about 15 seconds, which will then set the IB, so these will cease to move up or down, and the IB statistic will become live. Maybe it'll shut down now. There we go. Well, IRT is getting its knickers out of the knot. The IB statistic, which is now set and active, is real simple, and it's very widely known, and it is from the days of market profile, right? So it is not any kind of a secret. Why I can't stand looking at that guy. And it says the following. The high or low of the first 1 hour, i.e. the initial balance high and low, has a greater than 97.5%, and in this open configuration, greater than, I think it's 90 plus 98.1, I think. I have to wait for IRT to get back open, but let's say greater than 97.7 because I know that's the truth. Percent probability that the IB high, or the high of the first 1 hour, and the IB low are exceeded by price in the balance at some point in the balance of the RTH trading session. Few caveats. You don't know if it's the high or the low. Could be 1 millisecond after 9:30. Could be 1 millisecond before 1600. So it's not a slam dunk trade, right? And my advice from very painful experience is do not try to trade to the statistic. In other words, okay, we're above the VWAPs, we're above the mid, we're above the VPOC, here's the IB high just above us. I'm going long. I have gotten that shoved up my proverbial backside a number of times doing that, and it is completely counter to the statistic or anything else, but immaturity, I guess, or lack of planning, or whatever you want to call it. And what can happen is frequently you'll see this kind of thing, or it'll come and then turn around and go down and get the other side. So that's the first caveat, is don't trade to the statistic. Wait for the statistic to be set, which would mean we trade up. Let's say it's the IB high. We trade up through there. Then it goes into the situation where the criteria to validate an entry, whatever you have determined to be and you have vetted to produce an edge, occurs, and then you take the trade. Now, the two trades, as I said earlier, are the IB failure, which is a mean reversion, outside in. Well, in isn't very far away anymore, so that's off the table definitely for me because of the range requirement. That's actually 6 handles, but anyway, outside in. Or in the case of a directional day, it would be IB continuation, where we come up, trade like this, and then continue on. Now, today is completely atypical because we've had this big speech. Now we got the next, Trump drama is going to happen. And we've got this big string of signals across here where, irrational exuberance kicked in, and here we go. My recommendation is remember that there are 3 positions in trading. There is long, short, and flat. And quite frequently, flat is the wise choice. Very definitely, at this moment in time, I would suggest that's the case. You have to think now, yes, we've had a VPOC migration, which is a structured trade from Tom and the TLab guys. Common sense, the POC, remember the definition from the pre-market. The POC just marks the price at which the most contracts have traded so far in the session. And in this case, it's 5,374 contracts. The minute any one of these prices is 5,375, the POC will move to that level. So it's not magical or mystical or anything else, but this kind of action, what have we done? Well, first of all, I'm not seeing the whole range, so I'm not holding up. Here's the first migration. Here's the second migration. Which direction is it moving? Moving up. What would that suggest from a higher perspective? Well, because it's the price at which the most contracts have traded, that means that's the price at which there has been the most trade. How does trade work? People agree to trade there. I agree to buy and you agree to sell. Remember that with futures, it is a zero-sum game. That means that's why they call them contracts, not shares or stocks or whatever else. It is a contract between a buyer and a seller. If somebody says to you, or you hear somebody on the internet or whatever say, well, the stock went down because there was more sellers than buyers, that's just, you just laugh and then switch channels, in my opinion, my advice, because it's impossible. It's a contract between a buyer and a seller. How the hell can there be more of one than the other? There cannot. How does price go up or down? Aggression. And notice that we've got 637 contracts sitting here at 85 flat on the ask. Will that be a lid on the pot, or will that be a magnet? Looks to me like they're going to trade up to it and get through it to me. But anyway, back to my discussion or my narration about direction with a equal number of buyers and sellers. It's aggression. If sellers come across the inside and hit the bid, price goes down. If buyers are aggressive and they come across the inside market and hit the ask, lift the ask, price goes up. That's how direction works in the futures market. If I misunderstood that, or if somebody else knows better and has, not just, oh, I think so, let me know in the chat. I would be, because I would really, that is my understanding, my belief, and based on, a lot of things I've read and believed and see, and just by the very definition of a futures contract. How in the hell can you possibly have more buyers than sellers if it's a contract between two entities, two traders, two groups, whatever you want to call it? So there you are. That's where we are now. I'm vetting the IB statistics, so in a sense, what have I got to think about? Price has been moving up. The POC has been moving up. It looks to me like we're pretty likely to take out the IB high. However, 85 is a pretty big line in the sand here with 644 contracts holding their ground. We had 330 stops out over here. We got an iceberg of 440 contracts. 587 contracts, these are sell-side icebergs, and 211 stops. One thing you can be sure of, all those retail boys and girls that want to pick the top are doing so, and they're plopping their stops right up above here somewhere, and so there's a lot of fuel building up. Another important thing to notice, these are the all-time highs. Importantly, this is the all-time high put in during the RTH trading session on the 30th. 13th. This is the all-time high put in on the 15th during the ETH session. And historically, the RTH guys don't like the ETH session people, which are pretty much, Asia and London, holding records, all-time highs, whatever it might be. And I always mark these together and I always comment about it. And invariably, it's happened once or twice in the last few weeks. They always jump over the top and get them. RTH always takes them out. Will that happen today? Don't know, but it's definitely, you got a lot of fuel up here for top pickers. You got these all-time highs up here, which would suggest higher ground, meaning then an IB continuation trade. But what's the but? Let's see what the but might be here. Let me think about it. I don't know that I really can see a but, to be honest with you. We traded out that 600 contracts. Look at that. Those 600 traded out right there. These volume dots, or whatever you want to call them, can be 3D, but I figure that's additional computation that I don't need to do. They are colored by delta. So in other words, there was buying and selling here, absolutely, but it turned out being delta buy. Man, eyes are killing me. Okay, so I guess these girls decided to come back to the party over here now. You got your knickers all ironed out there, IRT. Oh, well, we got no legs. That's a good thing. Stuff seems to be moving. Naked volume points of control. We'll shut that off. Data should be up to speed. I could download it again, I guess, but we just shut it off and restarted it. So typically that is a new download. We're on the day session. Just kind of running around the park here, making sure all the ducks are in a row. Still only 583,000 contracts, and we're at a positive change of 1.42%. Green across the board. Remember that the color here and the positive or negative change here is simply based on the last price. How does that relate to settlement? Boom. All of it is straightforward and easy to grasp and understand. The POC, there are two POCs. I guess you already know that. There's a more muted yellow one, which is a full session, and there's the bright shiny one, which is the RTH. So there you go. We have teased this a few times. Now look at this here. Remember, this is real dangerous. These are five points high. That's not good. And it's going to be tough to keep my 1 point range because of this extravaganza over here. But now we're at 2.5 points. So let's say you traded to this statistic down here. You're long. Guess what you are now? You're flat. You're stopped out by 6 handles. So, oops, hit the mic with my knuckles. Sorry about that. So that's a thing to consider for sure. See, this is how I used to keep it, and that's pretty darn difficult for me to keep my head around in terms of scale. I want to get this better. There's a point. So now this is point high. But what have we done? This is the reason why I was doing the VPOC migrations in the past. At one point in time, to try to keep myself centered with some sort of scale, I was even using 5-minute candlesticks. So that I could keep some sort of an idea for scale, That's, I don't anymore, obviously. But there you go. I find it much more intuitive and informative for me to keep the entire range in view. Now I can't do that. Yeah, I can. Look at there. There you go. So that's why I throw that that visual reference over here. There's the entire session so far today. And we're at 2.5 points high. I wish I could set this specifically at 3 points, but I wish you could just set the damn thing and have it be, now there's a problem. You see this down here and up here? This was something that I noticed as an issue with Bookmap the other day. You see, now I'm going to scroll out so that I don't have the whole thing in view. And I think you're going to notice that this jumps up and aligns with this. And maybe I'm full of crap. Okay, so that's not the case. The other day, I could scroll in and out and the POC would move depending on where I was, which is a whole lot of bad news. I don't know what's the deal here. 6480, that's exactly what my Bookmap, my IRT is saying, but Bookmap is not coming along for the ride. And there we have the IB statistic. You see? And now I should have been paying closer attention to that. This was, and could be again, a sign for the IB continuation trade. But I'm not comfortable with all this weirdness that's going on here. And random risk is going to be happening here pretty quick. So any one of these touches here, and I'm going for the IB continuation trade. 86, 91, perfect. You're scaled and everybody's happy. Bummer. I don't like it when things go south, when my charting tips over and I'm not confident, or, you know, it's what I base everything on. So I want to be looking at the truth, if you know what I mean, or reality, let's put it that way. This I don't get. What I'm going to do now is refresh the data over here, because remember I had to restart this thing because it got all balled up. Down, it's really hard with IR2. You go like this. Boop, now it's going to download all the data back a few thousand days. And you can watch what's going on over here in the download. We got a sell iceberg up here at 91. And that's where our 600 boy went. Here's Mr. 600 guy up here again on the sell at 91. Came up from 85, remember? And this guy is either trying to put a lid on the pot or a magnet. And if you ever figure out exactly what that means definitively, you be sure and call me right away, because that would be a real, and within the time frame, because obviously there's 91 and that's been a lid. Now they've dropped down from 91 to 90. Price could trade all the way back to down here and then back up. You know, that's the random nature of the market. It is a random environment. And the outcome of the very next trade is 50-50, and that's a statistical fact. I'm pretty disappointed that this, there you go. Restarting and re-downloading the data, we're aligned at 6470 for the RVPOC. Look at this. Look at this crack shit over here. They didn't get up there, but look at that. Okay, so now the POCs align. That's a good thing. I'm spooked about the condition of the week, the heavy news day, and, Agent Orange and the critical risk band taking the stage in a little bit. And who knows, he may not have any. He's going to the Kennedy Center. Maybe he's been back and forth about going to rename the Kennedy Center after his wife. Which is pretty ironic when you stop and think about it. He was an illegal alien working with Jeffrey Epstein in New York when she met Trump. Her parents came over here on the whatever they used to call that family following or whatever they called that thing that they would do. And after they were brought here and given citizenship, then they went and removed that law or that statute or rule that said you could do that. So that was put away. It is truly the hypocrisy is truly amazing to me. Okay, so my data seems to have been straightened out with IRT. Let's go around the horn here. Look at this craziness over here. Here's today. Let's get over here. There's today. There's, a string of singles. Still hell won't have it. Singles meaning just single prints. There was not two TPOs printed at any point through there. We're at lightish volume, I think, and we'll look in a second, and a 1.52 positive change on the ES. Let's look at our volume over here and see what's happened in the last little while. Whoa, my goodness gracious, look at there. We were at 69% until the speech started, and now we're trading 153%. And look what happened to the ATR. We were from 2 to 14.5%. Ha! Wow. That's pretty incredible. Isn't it? That's that to me, if you want to, and I'll be the first to admit, I'm probably way too paralysis by analysis here, but if my goal is to manage risk and not blow up my account and achieve my goals and my targets, a highly volatile, really big fluctuations in risk are not a conducive environment to be trading. We got the 600s back up here at 90. Now they're going to get up there and smack them, I guess. We still got that iceberg holding on up here. What this does is show you when the iceberg came in the market and then how far it goes before it's traded out. Wow. That's pretty amazing. That's pretty amazing. All right. Pretty surprising, huh? This is real surprising to me, the fluctuation in the ATR like that. I think, I mean, without, you know, I don't stand around and give a lot of thought to the ATR much. So that may be a perfectly normal expectation in given the where we are, you know. So that 600 got traded out at 21. 348 of them did anyway, and the iceberg was taken out at $1.50. Here we are. Here's the high. Boop. Okay, had I taken the IB statistic long here, here, it would be scaled. I would be stopped right here. Scratch. Do you take it again here? You know, that's the beauty of rear view mirror trading and hindsight, and something I avoid at all costs. and pretty much the stock and trade of all the internet wizards. Be right back. Okay, one of the things to consider here is if you're trying to vet a risk neutral strategy like I am, the risk neutral scale is not, of course, the goal. The goal is your profit. That's why you're doing this. That's why you're putting money at risk, and why, how you're going to increase your account, grow your trading business. Of course, the risk neutral scale is great and important, hugely important to me. But when I'm thinking about putting on a trade, I'm considering not just the risk neutral scale, but do we have a likelihood to get to the target in this case? And that means obstacles in the road. Just with my basic range requirement, here's 86.25, and this is 91. So that does give you 3 points without an obstacle. An obstacle is any kind of a level or a line in the road, in my view, where a price may react. And it really sucks that I can't get this screwed down where I want it to, but I apologize. Oh, I thought I had it there for a minute. Wow. In order to get this at one price, you got to get it really wound out. I don't like that at all. To me, this doesn't make sense to my brain. This, in terms of scale. And here we go. We're going to get up there and smack those all-time highs. Sure as the world. Wherever they went. There they are. 600 boy disappeared. Got traded out. The IB continuation trade would have been Jim Dandy. Oh, there we go. Magically, I got to $1 and didn't even know it. Or a point high. That's why scale and is important to me, because I don't get the numbers much. I'm dyslexic. So when I was looking at it, wound in real tight, this didn't look like enough range, but quite obviously there was more than enough range here to the scale. And then once you've got the scale off, you just put on your helmet and put up your feet and sit back. Now we could conceivably just continue to grind higher to the all-time highs. And then, in appreciation for Powell's dovish comments. And who knows what's going to happen in an hour. That's ever-present danger. Canada to remove retaliatory tariffs on many U.S. products. Why? Did we do something? Did we remove some crap for Canada? I sure hope they don't start knuckling under to Trump, or we're going to have Germany 1939 all over again. If we don't already. Missed opportunity here. And I have a stat for that, actually. Missed trade. Uh, what is it about? Minus 15. See how it reacts at that developing value area high? That's the reason for range requirement having no potential obstacles in the way. Not that there's anything that it won't trade through them or whatever, but it gives the opportunity. Oftentimes price will react at those levels and do something like right here. If you got long here and you're all excited about stuff at 90 and now you're, sweating bullets because you're about ready to stop out. Because there wasn't 90 would have just been the scale reached here. Sorry, here. That's just thinking out loud here. Shaking the bush here, boss. Okay, let me see if I got everything back to normal, maybe. Kind of, sort of. Kind of, sort of, maybe. Let me know if that music's too loud or weird or something else there. If anybody's in the chat. I don't hear it over here. I just watch the, whatever they're called, the mixer bars moving around, and there you go. There you have it. And I noticed my mic balance had gotten over unity, so I guess I bumped that with the dusting thing. Yeah, well, here we are, back down to the IB high. In it. At no point did we get near our profit target, which is what I was trying to talk about earlier, that I am aware of and considering that very definitely. Also, I will be working on the what ifs. I so wish I could come up with, if anybody knows a real accurate, challenged coder application that works good for backtesting futures. And quick, what if stuff, right? Okay, what are the statistics and the win rate, etc., expectancy, which is the most important thing to calculate, win rate being just clickbait, meaningless internet crap. It's a part of the expectancy formula, but taken by itself, it's useless. I mean, it can be so misleading. Anyway, if you know some system, what if, okay, so let's say we take the scale, what is the overall picture if you take the scale and then at some point stop to break even, stop to entry, for example. That would in effect lock in the first scale, which is only 12 ticks on one contract. And in my initial experimenting with it, it was not a good idea because you got stopped out to entry way more than it was good for you, you know? Right, because remember, my parameters here are 3 points, and they cannot change through this vetting process. Or if I do change them, then all of the work before or the new work is not part of the same data set. I can't be included in the vetting process of the trade, of the setup. It has to be the same. After the fact, then, though, you can certainly trade that setup different ways. You know what the baseline is. You know that you have a 43%, like the IBC continuation trade that I vet with the back testing and IRT at this point, has a 43% win rate over the past 20 days or something like that. And it's about 2.4 or 2.8 something to 1 risk reward. It's profitable, for sure. But so what happens to that if you bring that, after you get to the T1, you trail up to break even? Or let's say what if once you get T1 and progress another 3 handles, then you trail up. You know what I mean? There's as many variations on the theme as you can dream up if you're standing up and awake, you know what I mean? It can be overwhelming, especially if it's a bunch of additional coding and crap that has to be done in order to get those statistics to come out of the system. Tried to get into Python, and I got to where I could, coded up the risk neutral 2-lot package and all that kind of stuff. And then with the free backtesting packages that I was able to find, like backtesting.py and those kind of things, but they are not for futures. They don't deal with points and ticks. They go in penny or less increments geared for FX and crypto. And I actually went to GitHub or whatever it is and pinged the guy developer of that particular one, and he said no, and I have no plans of doing it for futures. I'm not interested in it. So he no longer developing it. So that was that. Quant Connect is one that's you pay for, that's pretty complicated, but that is at least futures driven and their own futures data. With the Python stuff I was doing, I was downloading my own futures data from IRT. And I really wish it would be easy. I just heard yesterday night Tasty Trade, who is of course Tom Sosnoff and Tony Batista, I think is his name. They were career options floor traders. They started building Thinkorswim, had an idea to do that, built Thinkorswim, sold it to, I forget how it goes, and it's ended up with Schwab, made over $1 billion. Then started Tasty Trade and ended up selling that again for another $1 billion or more. They run the network Tasty Live and Tasty Trades. I don't know all the intricacies of it, but they're still very active. very good resource if you want to listen to things like After the Market. Particularly, I enjoy the Sunday evening first call with Tom Sosnoff, the After the Market analysis with Ilian Spivak and Chris Vecchio and Dylan Radigan. Spivak is the macro money head of Tasty, and really sharp guy and real interesting to listen to. Anyway, they were talking about during the ads between segments, Tasty, I guess it's Tasty Trade Platform, I guess is what it's called, has now got a whole free backtesting section, and you can backtest over 10 years of data. It is options focused, the whole Tasty universe, and I don't trade options. So, but I'm hoping to God that there's an application or that it can be applied to futures. And I'm going to look into that over the weekend. So there you have that. And welcome to the stream. It's a Friday. It's 10:18. I think I can hear Antonio firing up the blender over there for those blender sports this evening. Lucky dog. And I will continue to narrate and stand by. It's only 10:30 or 10:18 in the morning over here, so we got, another bunch of hours to go. 2 hours into a 7-hour exercise. Certainly would have loved at any point in time in these last couple of weeks to have gotten away from this drama with TopStep, which is continuing to a certain degree. By the way, I thought it was all ironed out yesterday, but it is not completely. They apparently can't get one of the accounts reassociated with Rhythmic. This is really not a good thing. To me, I think they got way ahead of themselves. They got the cart way before the horse with TopStep X, I think it is just barely beta. They don't have an OCO or bracket order. Come on, And that's a professional platform. And they got all these training wheel things they put in there and make a big deal about, like locking yourself out and all this kind of stuff. Well, you have to do that, or are you a adult? I think those are like pacifiers, or misdirection for real flaws. And this whole story that I'm going through now seems to be a case of the back office is also equally mature as it is applied to this new whatever they're doing. So we'll see how that works out. Greg has been real helpful. Everybody's really helpful, and they've not denied anything that it was. They've not shirked their responsibility or anything like that at all. So there's nothing bad to say there. I just hope they can get it sorted out, and we'll see. I offered them another option, 2 other options this morning. Greg, we'll see what they come back with to try to help, do my part. Now what are we gonna do? So, here's an interesting one now that I didn't catch while I was busy babbling about, I don't know what, probably TopStep, I guess. We've now had the VPOC migrate outside the IB. That is a big thing that Rod, take care, Antonio. Bon weekend, huh? We've had Rod and company have been studying and vetting, working on that statistic. Typically, it's the general understanding is to be at least 3 points. But there are some statistics about how frequently we'll return to the IB and back to the VPOC or whatever else it is. So when this migration happened, this would have been a confluence of positive signs in the direction of the IB continuation when we were getting these potential triggers down here. But not 3 points, so. Okay, I'm gonna tear into some homemade sourdough bread here, fresh baked this morning. Wow, look at this. Look at this drama here. Crazy Island in a string. And that's, remember how that happens, right? It only takes one contract to move this around because it just marks the price at which the most contracts have traded. If it goes up by one, there it goes. So I believe Mr. Microphone has taken the stage at 11, isn't it? Yep. The Fed's hammock. Oh, well. And of course, Trump was speaking to reporters at 9:15, trying to do as much as he could to disrupt. So strange. Okay. Yeah, we've got hammock. 10:30, and then Trump at 11, and Carney at 11. Okay. Who'd have thought we'd be living in the Truman Show? That's essentially where we are, I guess. It's basically reality TV. Really weird. So welcome to the stream. If you're new here, smack a thumbs up and subscribe and, you know, spend money, whatever. For sure, drop something in the chat, one way or the other. Good, bad, indifferent, where are you? Whatever. whatever it is, we will undoubtedly fluff around here and slowly grind our way, in my opinion, up to these new all-time highs. That would not be out of the question at all. I'm trying to, my recent workflow, or, is to keep the entire session in range. But what you have to be real careful about is, in order to do so, when you have such an expanded range, the scale gets way off. Now, these are 2.5 handles between each price level. So that's important to remember. The statistic in the trade that I've been vetting is the IB trades. And I didn't partake here because I'm not going to get on something in the middle of a big speech like that. And I'm hesitant now. Again, I'm so sick of saying this, but it's the truth. And now we got, Mr. Microphone, or Agent Orange. Richard coined that one from England. I like that one. Agent Orange and the Critical Risk Band is taking the stage at 11 o'clock. Who knows what? Because it's, he's going to fly over to New York and go to the Kennedy Center and then go back to DC, I guess, because that's costs somewhere around $500,000 an hour for the POTUS entourage to move. You can just do the math. That may be an understatement too. That was several years ago that was the case. So all of this story about saving money and Doge and all that is, in my opinion, it's just all misdirection.
Deixa de preguiça, deixa o cobertor, deixa que hoje eu vou ser o teu calor.
And
Sei que tá friozinho,
yes, I wish I were on this trade.
já sei como é.
Then when I scroll back out, I get them. It comes into a 1-point high again, which is where I like to keep it. But you see you lose all perspective for the trend. Now, I have my IRT up over here to the right, so I can still keep an idea on what's going on. But for the sake of the stream and everything else, I try to keep it all in view.
Deixa de preguiça, deixa o cobertor, deixa que hoje eu vou ser o seu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu. Deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhã
Well, what's going to happen? Days like this, fortunately, are far and few between. The only other similar situation is the non-farm payroll, which seems to be in question that will even be published anymore, unbelievably. Okay, back to the middle, right? My advice is keep your powder dry. Remember that you want to minimize your risk exposure in the market and maximize your profit potential. Or, in other words, asymmetrical risk reward. Well, boys and girls, 10:44 Central. Jackson Hole. Big string of singles. Just pretty much a steady climb up in the Rincos. Expected move and weekly expected move having not much to do with anything, of course. Staying green the whole day. Where is our volume now? We were at $1.69 a minute ago. I've fallen off a little bit. This is now up. Remember that this is the ATR. We were up in the 10s, and then we got down to the 2s, and now we're in the 5s. You need to always bear what this is in mind, because it's a good measure of how much risk you have on, and what is, the probability of your statistics is greatly diminished by an increase in the ATR, obviously. That's further confirmation for why when you're doing a statistical analysis or vetting your trades, you want to be sure and have a statistically significant data set that puts your results outside the likelihood of a random distribution. What that means real easily, or easily understood, is everybody knows a coin flip is 50-50. There's only two sides. Flip it 10 or 15 times, and you would not be surprised to have a majority of outcomes be one, head or tail, one or the other. That's random distribution. You flip that coin 1,000 times and you're going to be zooming in on or getting close to 50-50. That's a statistically significant data set that's outside the normal, or the expected, maybe, or I don't know the right, pick a word you like, random distribution of trials. It's also a good reason to have as big a data set or sample data set as you can for your trials, to incorporate as much variation in volatility, for example. Doesn't look right. I guess it is. Oh. Thank you, Mom. Oh, sure what that's all about, but okay. Happened here now. Jesus. So, be interesting to know what the latest thing is developments are. Well, we're getting pretty damn close to this all-time high, huh? Keep nudging it up there. It looks a lot closer when you get the whole range and scale because our lift here is so much smaller. This is 2.5 points. So you need to, I wish I could set this for 3, but I wish I could click and set it, but I don't think you can. And I'm tired of messing with them, but if I could set these for 3 points, then I would know that each division or each level represented one of either my scale or my, T1 or whatever. That'd be handy. I spent in an environment like this. I like it fine when it's just one. When it's just 1 point, but I can't do that with such a range. Gonna not have such a dramatic IB. Let's see, where are we? 4? Well, hush my mouth. It's actually more. We've got let me just be sure I'm right here. Yeah, we've got an 87. Well, 85 point handle IB. I was moseying around here talking about how I couldn't remember having seen such a wide IB 2 days ago when it was 60 handles. We've just outdone that by 25. In the ES, of course. I suppose that's like chump change in the NASDAQ. Let's see what's going on in email world over here. So if you're new to the stream, welcome. Hit the thumbs up and whatever else. Be an honor if you subscribe. That'd be a big help. and definitely drop something in the chat so that we have, it increases the conversation. Questions, I think, if you think I'm full of crap, say that, whatever. Just to reiterate, this is my virtual journal. I benefit in that I can see I record and can see everything on my screens, and my voiceover here provides insight as to what I was thinking. It's completely, it also provides 100% transparency and accountability. Because the stream, and that's the reason that the stream lasts from 8 o'clock in the morning until 1500 every day. There's nothing, no shenanigans can happen in the background. Not that I would want to. I find that so strange that people try to cook those kinds of things. In my case, this is my journal. Who would I be screwing? Who am I trying to trick? Me? How dumb is that? I guess it's like lying to yourself about whatever, I guess. But for me, in this case, it's really obvious that would be a stupid move. I can understand it where the rear view mirror internet influencer guys who can't trade their way out of a wet sack would do all the tricks they get up to with 2 accounts and doing this and doing that and something else, because that's the only way they're going to get. They base their viewership, which is how they make their money, on dramatic stuff and clickbait things. 90% win rate. They don't mind telling you. They don't tell you that their risk reward is, 10 to 1. In other words, they're risking 10 to make 1. So obviously, a 90% win rate is a very definitely losing proposition. You go broke. Win rate meaning nothing. Expectancy is the best one. It's the win rate times win rate times average win minus the loss times average loss. I looked at it every time I say that quick. It doesn't sound right, so I think I'm wrong. What it boils down to is it is a factual mathematical calculation based on the number of trades you've taken and the relationship between your win rate and the average win, and the loss rate and the average loss, or the number of losses. What is the expectancy for that particular setup? If it's 10 points, then you expect to win or to earn 10 points on every trade in that real basic example. And that's probably considered one of the most accurate and non-bloated, not easily manipulated statistic. And of course, basic statistics, over 1,000 trades, and you can do it all from the same number. Over 1,000 trades. What percentage of those trades, how many of those trades did you achieve T1? How many of those trades did you achieve T2? How many of those trades did you take a full stop or scratch? And if you're functioning within your probability range, no matter if it's a string of losses or not, or whatever, you know that it's okay, it's within parameters, and so you continue trading. Yeah.
Sempre chorando por uma nova ferida. Mas como
Here we go. It's the 11 o'clock hootenanny. Yeah, I think in Kennedy Center. So, I don't know. My guess is he's going to rename it. He's going to rename the Kennedy Center. That's my guess. He's floated that idea once before, I believe. The Ivanka Trump Center or something. Really crazy. I don't know. I don't know how or why a person would think that. I don't know. Anyway. I don't guess it matters, but it is kind of a slap in the face of history, I suppose. Apparently they are demanding that a team of White House people review every display in the Smithsonian Institutes for alignment with current administration goal views of ethnicity and stuff. As some of the craziest bullshit I ever heard. And why? I mean, don't we have more important stuff to do in the world than that? I guess not. It's pretty crazy over here. If you're not over here, it's pretty crazy. I would say without any doubt. Let's see what we got going on now. Jeff Goldblum, I don't like you much, so you get out of here, dude. Deutsche Bank makes an appointment from the Oval Office. Announcement from the Oval Office. Wait a minute. Well, I thought this was going to be maybe I'm hallucinating again or something. I thought sure I saw an announcement. Oops. That there was this thing here, which has been on the books for a long time, was to be at something about it driving now to the. Let me see if we find that. Trump going to the Kennedy Center right now at 9. Is it possible that he could be driving to the Kennedy Center, do something there, get back through New York traffic to the airport, fly back to D.C., get through traffic to the White House, and give an announcement from the Oval Office in an hour and 45 minutes? Makes announcement from the Oval Office. Wow. Something's goofy there. That didn't sound right, does it? I mean, I'll be the first to say I have never done any of those things, in that order or any other way, so maybe you can. I thought it was at least. And you got to have, ATC and clearance and stuff. I mean, if you're a pilot or know anything about that, you just don't load and launch, So I don't know. I wouldn't think that was possible, but maybe. Seems like they lay awake nights just thinking up ways to trip things up. Now, I did see yesterday, and this is pretty important, somebody, Fox News, I think I saw it reported, announced that Trump has purchased $100 million worth of bonds, government bonds. Just. So now he is, if that's the case, the way to maximize the profit on that purchase is to have the Fed lower interest rates, which lowers the bond prices, which increases the bond yield, which increases his profit on his $100 million investment. And that's as plain as the nose on everybody's face. You wouldn't even think that kind of thing was legal by the person who's also, on one hand, you know, driving decisions and policy. I wouldn't think it could be legal. Apparently now everything's pretty much legal because, you know, between the Supreme Court and Congress and the DOJ's in the pocket, so between Supreme Court and Congress, who have had a mutual diarrhea of backbone, there's no checks or balances anymore. I guess. I don't know. I really don't know. But it makes it hard for what I'm trying to do here and what I think we are trying to do as traders, because how do you, you know, wow. What about insider trading and all that crap? I can assure you that if I bought the bonds or XYZ stock or whatever it was and did something to manipulate the price of them one way or the other, the SEC would be on me like stink on shit. But different teams, I guess. And I don't know that, you know, I don't care enough to research whether that headline was true, but I believe that it is. Because it was from two news sources, Fox News and CNBC. So, you know, I suppose he told them, I don't know. But anyway, crazy. Pretty crazy. Now we are at something. What are we? 11 o'clock. I think the Supreme Commander here needs to go for I'm also the soccer mom, kind of. I do the driving for the family and everything. Here. Because of the crazy drivers. And boy, they are crazy. We do not, this is just totally non-trading related, but an interesting observation. We've been here, never have lived in Texas before in my life, nor has my family. We've never lived in America before. We moved from Kuala Lumpur, where we lived for years and years, to Houston in August of 21. Because of my career in the office, US or ISA office was here. And that's what they asked me to do. And I don't know, a few months after that, I mean, that was right, remember COVID and car scarcity because of chips and immigration and shipping and blah, blah, blah. We ended up being able to buy a 22 Toyota Highlander finally. And in that period of time, This is a true fact. We have never gone out driving somewhere that at least one person hasn't just gone whistling through a red light like I wasn't even there. That seems to be the national sport here. It's crazy. It's the craziest thing you ever saw in your life. I never proceed into an intersection on a green light without looking if anybody's coming and are they stopping and whatever else. It's amazing. Truly driving here is truly a defensive sport, that's for sure. Never saw anything like it. Crazy. That's why she doesn't drive here. Anyway. So we're gonna go out and do some errands she needs to do. And typically I take a break over the lunch hour pretty much. After having been standing here since 6 or so. And will continue to be until a similar time this evening. So I am going to leave all the screens on, as I always do. Take a run around to Rose's here. I still don't understand this news story, but anyway. And I don't understand why Carney is caving on the tariff thing. I don't get that. I don't know if something happened I don't know about, or maybe we relaxed tariffs on them, or I don't know. Anyway, big string of singles. Here's the day's trade. Basically nothing. Fed starts talking. Basically a lot. What is this? If you are a market profiler, you'll be familiar with the fact that, or as a good example, a P-shaped profile indicates short covering. A B-shaped profile indicates long liquidation. So we've had a whole bunch of those lately, and then we had some balanced ones. Here was a B shape, long liquidation. We got short. What happened here? Ooh, big string of singles, which kind of makes it exaggerated, but it's so far turning into a P, so that could be short covering, and that makes sense because, everybody was smoking crack up to here, and then all of a sudden, oh my God, maybe not. Maybe they won't cut rates. The big selling tail on Wednesday, a nothing tail on Thursday, and then here we have does it make sense? We had short covering here because all these guys were short, and now we went like this, and their stops are getting hit, right? So that makes perfect sense. And if you listen to a lot of older traders, including Tom, the market goes up to go down, goes down to go up, and up to go down, and down to go up. Based on the fact that it's a zero-sum game. Go back in the timestamps and you can hear my discussion about that. So here we are. This is the Renko chart. Again, with a kind of the B or P-shaped profile. Similar in the NASDAQ. We're banging our heads on this all-time high in the RTH. Still having the ETH above us. So would not be at all surprised if we did that. And here's our IB high, current RTH VPOC. And there you are. I can't quite get the full session on it. I can, but be real careful. This is the full session context so far. But be very careful that these are not 1 point lifts. This is 2.5 points. Each mark.
Todo lo que viví fue para prepararme y reconocer.
Well, I have no idea. That's the problem with the random critical risk, or unscheduled critical risk potential that we live in now. If you're a project manager or any kind of basically a manager, that one of the first things you do after you plan, determine the project plan and the resources involved, you identify and, if possible, mitigate, or at least have a risk mitigation plan. What, well, if this, then that, if not, then what, kind of a thing. And with an unidentified, more or less spontaneous critical risk potential, it's really tough to do and pretty near impossible. So you've got to be real careful that how you manage risk. My advice, or my approach, is to limit my exposure to risk, i.e. exposure to the market. And I'm talking about the administration and those few folks who are pretty much fond of the sound of their own voice and definitely not camera shy. Can say anything at any time, like there was no planned anything for Trump to be speaking to reporters at 9:15, but he did. Well, he didn't really say anything because Powell's speech was going on and everybody was pretty focused on that. He didn't really say anything that moves the market, but certainly look back in April at the world famous tariff rollout, and pretty scary. So that is the risk, and no political comment or anything else, but that's a fact. We are operating in an environment with a ever-present, unrecognized critical risk, and it can also have, and we don't know the potential impact of it. And it might be something as innocuous as, we're going to do this to the Rose Garden or whatever, or we're going to lift the tariffs on all the penguins that we put on in April, you know what I mean? You don't know. Or we're going to fire Powell and take over the Fed and, scrap bonds or whatever, what I mean? It could be any extreme or none. That's why it is an unknown risk and why it's dangerous, and why I recommend limiting your exposure to that risk potential as much as you can. And you have to be really aware of the fact, first of all, absolutely don't put on trades without a stop in the market. Server side stop. That eliminates the risk of your crap going down. Somebody hitting a light pole and your internet goes out. If it's on your computer, nobody knows but you. Most all good programs nowadays are server side. So that's typically on a co-located server and forget the place in just outside of Chicago there where they have all that and stuff. Anyway, so that's first. And second of all, remember that a stop, let's pretend you had a stop here at whatever the hell that is, 64.5 for whatever reason. When price hits that stop, it converts to a market order. It will be filled at the best price that it can. If you're in the middle of a liquidity vacuum, or in other words, there's a line of orders here or levels where there is less than, say, 1, 2, 3, 4, 5, 6, 7. And there's less than 700 orders in the queue down here for 1, 2, 3, 4, 5 price handles. If somebody puts in an order for 1,000 contracts, they're going to go boop in the blink of a flip an eye, and it's going to go right past your stop and up to wherever it was when all of that liquidity satisfied that order. That is a stop cascade or stop run, volume liquidity, or liquidity vacuum, whatever you want to call it. But that's how it works. I mean, it's just, again, it's not mysterious or magical. It's math. If this is inside bid is 61, you put in an order for 7, you hit the bid for 71, it's going to take that one out, the next one out, and get into the third one. Easy. That's all there's to it. And I will now go get ready to take Mama to whatever she's got up her sleeve and be back for the 1 o'clocks, I hope. If for some reason I'm not, thanks a lot for dropping by. Thumbs up. Subscribe would be great. For sure, leave a comment in the chat. Say hi, who you are, where you're from. You don't like what I'm doing. You do like what I'm doing, whatever it is. It's interesting, it's not. It's helpful, it's not. If you're interested in these session prices, which push real-time automatic, 24/7 from Sunday night 1700 through tonight, Friday night 1600, subscribe and drop something in the chat, and I'll hook you up. I provide them for free to a lot of people. No problem. I'm happy to help. We've been around the horn. And the orange one is, I suppose, speaking still. Or maybe not. Doesn't say anything about concluding the remarks. And Carrie is, Carney is also speaking, so I don't know what's going on. But anyway, there's that. And that would be over here. Remember that the news sources I use are financialjuice.com. It is free. Obviously, you can pay for it if you've got money burning a hole in your pocket. And the other one that I like a lot and have used for years and years is investing.com. Great earnings, great reports, numbers, concise. You can filter it and it's not confusing to read or to see. This Financial Juice is similar right here, but it also includes this more kind of a squawk box environment over here. Both are free, both are, I recommend both. Everything I share and use except IRT and Bookmap, I try to keep them, free or whatever, having nothing to do with me, but for easy access for anybody partaking here in the stream. And I have obviously nothing to do with Bookmap or IRT. They charge what they charge, and I pay the same. I get no consideration or anything. I'm not sponsored in it or monetized in any way for any of this, including and especially YouTube. So there you go. I will leave it as it is right here. Go jump through the shower and see where Mama wants to get off to. If I'm not back before you leave, have a great weekend. So, has anybody figured out what POTUS was talking about? Maybe just needed to have a conflicting appointment or something. I don't know. I have no clue. I don't see anything. This is all Carney's speech, Carney's press conference. Don't have any idea what that was. Must not have been much. I don't see any reaction one way or another. I also, the scary part is I also don't see, typically in here they put remarks concluded by whoever, you know, or press conference over or whatever it is. So, got no clue. No clue, boys and girls. Here we are. I mean, in hindsight, this is, you know, get along the eye below and rock and roll. Absolutely, obviously, so easy to do when you're looking in the rearview mirror.
aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas as migalhas do passado vão viver tempo de glória. coisas chegam quando passam. Se o que aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas migalhas do passado vão viver tempo de glória. Pois é, o tempo de Deus não tem razão. Até o dia que soltarmos o que nos foi presenteado, esse pássaro na mão. Seu assovio é tão lindo, é o canto do perdão.
Salgo a caminar al sol por nuestro lago y por donde mire te veo en todos lados. Tantos recuerdos, cuánto hemos pasado. Ay, amiga, cómo te extraño. Ay, amiga, te extraño. En nuestro universo todo era posible. Cantamos, reímos, bailamos y lloramos. Nuestra amistad nos hacía invencibles. Siento tu presencia
Well, that was fun. Got caught in a torrential downpour here. But hey, it's good for the ground. What happened? We're approaching power hour. It looks like exactly zero happened while I was away, basically. They're still just flopping around over the IB high. They didn't get up to the all-time high. Did we ever determine what the big announcement was from the admin? Okay, let's take a quick loop around the park here. The high time frame. This is investor RT. This is my micro composite chart. Daily RTH session, daily candles. Wherever the candles overlap, I draw a volume profile and extend it around them. And in so doing, I get a micro composite VPOC, etc. And you see that we just tagged out the naked VPOC that was here. And now we still haven't gotten the all-time high. This was yesterday, the big selling tail from the day before, and here we are today. Market profile chart. This is the ES Renko and Q Renko in the mini. If you're interested in micros, that's right here. Same exact configuration. These are the naked volume points of control. Same idea. Now, these are the naked volume points of control for the mini. Here we are, clear up here. The point of control is way up here at the top. That's dangerous. We're positive across the board, 1.55% positive on the ES in the green. 1,000,007 contracts traded so far. Let's see what this looks like. Coming up, going down. It was 69, then it was 159, and I think the last time we looked at it, it was like 110 or something, and now it's back up into the just under 120. This has been pretty funny, though. This is the ATR. We were up over 14 something, 15, right during Powell's speech. And it's just been a continual grind down to back down to 3.5 points. What do we got on the net? So now we're nationalizing Intel. Maybe that was, no, hell, that's at 12, that's just 1 o'clock. That's just a little while ago. I don't know what that world famous announcement was. You can bet one thing, if Trump / takes a 10% stake in Intel, there is going to be a giant rethinking of tariffs and everything around CPUs would be my guess. Just mark my words. First, okay, what do we got here? I'm dying to find out what the story was. The big announcement. Oh, God, you're kidding me. FIFA announcement. You are kidding me. You are kidding me. Okay. Okay, well, that's newsworthy. Here's the big announcement that I was particularly worried about. Anyway, good. Well, that's great. No, essentially good news from Jackson Hole as far as the market's concerned. I'm not sure about the population of the country and the economy, but there you go. The market doesn't care about that, really. To be honest, traders don't. And so let's zoom on to the next one. Where'd I go here? Where'd I go? Boop. There we are. Oh, save that. And here we are. This is the full session. My process now is to keep the full session in view all of the day until I anticipate interacting with the market, i.e. trading, and then I can zoom in and get the price action that I'm looking for in terms of the context, the parameters and the trigger. And what I do at the beginning of every session is throw this blue vertical line on over here, and then I can just glance out of the corner of my eye or my peripheral vision even and catch that blue line and make sure I know that I've got the whole session in range. That's, I think, gives me a good touch with the market. Typically, I like to have the price scale here at $1 or at a point. In other words, 85, 86. But because of the extended range today, this is 2.5. Not much I can do about that. There's 5. Maybe that's easier. 5 points. Doesn't work for me. This is still 2.5 points. So you can't really wind out more and keep the entire session in range. This is pretty irritating, but this seems to be the case. So there you have it. Here's what we're doing today. It's a giant P-shaped profile, which is classic per market profile. That is classic short covering. All on the Fed news here. The Fed, Powell speech. A little bit more upside and then just flattening off right around the IB high. We have a huge IB today, about 85, 80, let's see, what is this, 86, 84 handles. 84 handles IB. Not ticks. Points, handles, whatever you want to call them. Big ones. And I thought day before yesterday I was, pretty impressed with a 60-point IB, thinking that was pretty clever. And here we are at 84. So here's the all-time high, as I referred to earlier. This was put in on the 13th of August. in the RTH session. However, right here is the real all-time high on the 15th in the ETH. And it is pretty astounding to me that they've let it go this long, except for all the uncertainty in the market. But my experience is that the RTH traders session participants don't like the ETH to have any kind of records or highs or lows, etc. So maybe not today from the looks of the market, but I will be flabbergasted if by the end of the month this isn't taken out. So you can we'll make a deal, and I'll bet you a cup of coffee that by the end of the month this high is exceeded in the RTH session. Maybe one tick, maybe two, who the hell knows, but I'll bet you so. This naked volume point of control from the 19th has been taken out because we've traded over it. And the way I do my workflow or my procedure is that when a level has been revisited and is no longer hot or active, I change the text color to black. And then I know that they've been revisited and are no longer active. And unless it's something like these up here, which I'm always interested in, or the most recent POC, MCVPOC, I'll take them all off my charts or off my book map this weekend. What else we got happening here? Going to be in the world famous power hour here in another couple of minutes. Top of the hour, that's 1400. And the stream will be winding off as usual at 1500, the cash close. So the way this works, if you're new here, first of all, welcome. Smack the thumbs up. Drop something in the chat. Let us know you're still alive and haven't, passed out from boredom or something. I start the stream every day, every weekday, trading day, at 8 o'clock in the morning. Central Standard Time. All times on my charts that I refer to are Central Standard. I start the stream every morning at 8 with a basic, all the usual disclaimers, and then the setup, review the numbers for the day that are going to, reports and things that will be impacting the day. Earnings, maybe, if we're in the earnings season. Then I look at the pre-market and what we did overnight, what I expect the market, how I expect we're going to open, and what I think we will achieve through the day based on the reports, etc. Set up the trading, risk-neutral trading system and scale brackets on the book map. And then we open, and the stream stays live and active the entire day. You can always check the time right down here at the bottom of the screen. You notice that this is streaming the screen, the monitor, not just the application. So nothing is secret or a surprise, or more importantly, tricky, shenanigans. The time to the second is always right here, as is the date. And if you want to see if they're close, you can see the time and the date, and there's the time and the date. So there you go. I don't have any indicators on my charts or my book map, only developing POC for both RTH and full session in book map, a VWAP for the RTH, VWAP for the Globex for the full session, the mid for the RTH only, and then the price levels. I've talked about the IB high and low, but I will again. First, it's important for me to get across. And if you're, you know, if you've heard this a million times, I'm sorry, but if there are new people coming and going, it seems to be all the time. The numbers are all over the board as far as views, and I guess that means people coming in. So it's important, I think, to let everybody know what's up and be on the same page, kind of. The IB high and IB low are named, are initials for an acronym in the old market profile world, and meaning initial balance. In reality, all that these two levels represent are the high and the low of the first 1 hour of the RTH trading session, period. Nothing more, nothing less, nothing magic. And I'll also point out that there's nothing hard, magic, mysterious, secret on any of my charts or platforms. I openly share everything. I try to explain everything as best I can. And because I think it's important for traders, especially newer traders, to understand there is nothing mysterious about this. It's common sense, math, it's data, it's probabilities or statistics. That's it. That's all there is to it. Trading is a random environment. It is a statistical fact that the outcome of the next trade will be 50-50. The probability is 50-50. It is a binary event. It can only go up. It can only go down. It's like flipping a coin. There is no horizontal movement. We put time on it, on the mix. So it's not anything to be daunted by, or, think you got to wear a tall, pointy wizard hat and a magic wand, which a lot of people would have you believe because they want to sell you something. They want to sell you a course. They want to sell you mentoring. They want to sell you something. Most likely, in my opinion, because they can't trade their way out of a wet sack and make any money at it. Think about it for a minute. The possibilities, I don't know, maybe if you're new at this kind of, you don't realize the potential at our level. I'm not talking about some professional guy or SMB Capital or, a real hedge fund, or a real prop desk or something where they have unlimited capital behind them. Those guys can make 7 and 8 figures a year. Think about that for just a minute. But at our level, one of our colleagues, Rod, hell of a nice guy, good trader, down-to-earth young family man, good coder, has built the Static app, trades the same philosophy that I talk about here and that we put forward, the risk neutral. Put up his statistics from in Static, downloaded from Bookmap and his broker. Over $40,000 in 1 month profit. That's pretty good money. How many of you make 40 grand a month? That's average. In a 20-day month, that's averaging 2,000 a day, right? That's pretty good. That's a pretty good day rate. Now, the reason I'm pointing that out, not to be bragging about it, well, that's Rod, so it's not me bragging, but the point is, somebody that's trying to sell you mentorship or sell you an indicator or some crap like that, do you think that if they're trading a few hours a day and making that kind of money, that they would be troubled with or bothered with or so greedy that they couldn't share what they do with you, with us, and want to charge for it? I think that's one of the reasons I think Tom and the TLab is a special case, truly altruistic. And I'm sure there's some motivation there. Perhaps he's got a stake or own shares in Bookmap or something. I don't know. But he's not busy ever trying to sell you something. Nor is Bookmap trying to get you to subscribe. You're never solicited for anything. That makes sense to me. Same way I am here. This is my virtual journal. I'm working on my own sustainable, consistently profitable trading business based on statistics, which is how I believe the correct way to approach it is. And I'm happy to share that with anybody that comes through here and that wants to take advantage of it. That would, if some guy pinged me and said, hey, I've been doing this, following you guys for a while, or you for a while here, and I'm suddenly profitable or something, that would make me feel great. And I wouldn't say, oh, okay, so cut me in, so where's my check? Know what I mean? One of the ones that surprised me the most on the book, one of the Bookmap Discord places, which I don't even know his name, so I can't not tell you because I don't know. He wants to charge $975 a month mentoring, guaranteed profitable, but you have to stay in that mentoring program for a year. And it's the money back guarantee is only applicable if you follow every exact instruction that he says. In other words, he's got 10,000 ways out, right? And he's going to charge each person roughly $12,000. What a nice income if he gets 10 people, he's got a real snazzy income there. And isn't trading himself. I mean, and maybe can or maybe cannot trade himself. That's what I have found with most internet influencer, guru, rear view mirror trader kind of guys that you run into, and all these dorks that are, one trade a day at 9:47, and you're going to be able to retire in 15 minutes. You know what I mean? That typical crap. And another thing I find funny on YouTube especially is one of those people, and there's a certain crowd of them that go around, well, no names, but anyway, one of them will post something about opening range trade. And within 2 weeks, every one of them's got a guaranteed opening range trade post or video. And what they're doing is, I believe, this is my opinion, if that person who posts that, Weirland or whoever it is, it gets some video traffic, they hurry up and do the same thing because they want to piggyback on that traffic and people searching for opening range trade, and they want to get more viewers, and more viewers means more, and subscriptions is how they get paid from YouTube, and that's how they really make their money. That's what I think. Maybe I'm completely wrong. If I am, let me know. But and the guys that are shills for the or front men for the some prop places who are. Yeah. Anyway, this is my trading journal. It's, as I said, feel free to come here. It's a pleasure. Interact, throw something in the chat, interact with at some point. Trading is a lonely damn job, and it's really nice to have some interaction. Have a community kind of, and share ideas and whatever else. I do have a Discord, same name and everything, but it's we only use it once in a great. I don't certainly keep it up or all the time, right? At any time, and we more or less use it if we're going to get together after hours or something and have everybody on the voice kind of thing or whatever. So there's that also. Yeah. These are the news sources that are free, because I think it's important to try to help people with the best value. Financialjuice.com, free. You can pay for it if you want to. It's, I don't know, a couple $100 a month, I think, if you want to have real time or something. I don't know what it is. I never even looked. Basically, this is the calendar, essentially, and this is more of a squawk box approach. The old one that I've used forever is investing.com. I like the way the reports and numbers are presented clearly, concisely. You can see everything about them. You can filter both of these sites, including this one, for time, your time zone, what filters you're interested in, whether you want to only see 3s or 2 stars or and include 1 stars, which kinds of numbers you're interested in. You can filter all that. Those are free. Yeah, you bet. So there you go. I'm going to now go give my wife a hand. She just came here and summoned me, and I am smart enough to know when the boss says jump, I'm going how high on the way up, baby. That's for sure. Okay. We're in the power hour. I'm going to go see what's up with her, and then I'll be right back here, and we'll do the daily recap and look around the horn once again. We'll be rounding the final curve at the bottom of the hour here, and cash close again is at 1500 when I typically put the stream down, close the stream. That's basically the cash close. There's a curb trade of 15 minutes, but so what? And yeah. And then we're down for the weekend and back up on Sunday night. Well, the stream is not, but my machines come back online. If these price levels would be handy for you, or you could use them, or you're interested, you have Bookmap, or want to keep them in an Excel thing, I share them freely and openly with anybody that wants them. Just, thumbs up, subscribe, drop a note in the chat, and I'll get back to you, or DM or something, and I'll get back and we'll make a plan to get you the link for these. It's a CSV link from Google Drive. Then you just, in the case of Bookmap, Cloud Notes, you just throw it in the Cloud Note column and instantaneously, boom, there you have it. And I start my machines up on Sunday night at 1700, and they run through, they run through Saturday actually, but the market's all closed at 1600 today. So there you go. And I will go see what she's up to before I'm in big trouble. Okay, now we're approaching the final curve here, and exactly absolutely nothing going on as far as I'm in my world, my trading world. Let's put it that way. The start the recap here in a minute. As soon as we, I guess, around 14:30. I can't believe that big press announcement was something about Wi-Fi. Jesus, who cares? I mean, really. Or I guess a lot of people do care, but let me correct that. I don't care. And make a big announced event out of it. Pretty strange, I think. I don't care what it was. We got kids starving, people dying. The economy, headed for life support. And football. Anyway. So here we go now. We have rounded the final curve, and I'm going to say we're going to do the daily recap here. So this stream is my virtual trading journal. Whatever I see on my screens is transparent, accountable, and streamed live to YouTube. You can't edit those streams. My voiceover here gives insight as to what I was thinking about at the time or during the day. It's I start every morning at 8 o'clock in the morning. Introduction, review the numbers and reports for the day. Do the pre-market, set up, book map, risk neutral trade brackets and things like that. And then the stream stays live for the entire day until 1500, which is the cash close. 5 days a week. No trades are taken off the stream. That's a commitment, and that's obvious because there's the account. There's the time to the second, and it corresponds with bookmap, and so there you go. And I guess I could, if I wanted to, well, first of all, why would I lie about anything? Because it's my journal. Who am I trying to kid? Me? Know what I mean? That's a point. The reason I stream it to YouTube is for the transparency and the accountability, and also I can review the stream on any device, which is pretty handy. Now, the stream, by the nature of it being up for the entire session, it's basically 7 hours every day. And I certainly wouldn't expect anybody to go back and review that, including myself. So I keep I have a tool in OBS, which I use hotkeys, and I can put in chapters for the timestamps, which I input to the description after the stream is closed, and then it's published by bookmap or processed by YouTube and made and published. The streams all stay public. And I encode in the title of the stream hashtag and the date, and I do the dates day, month, and year. So if you want to search for some day that was non-farm payroll, for example, Friday the 5th of August, you could do that. Or 1st of August, you could do that. And that would be 01, 08, 25. Should work, that's the idea. From you and me both. I would really welcome participation in the chat. questions. I think you're crazy. I like what you're doing. You're nuts. You know, where can I send $1 million? That would be my most favorite comment in the chat. If somebody wanted to do that and be serious about it. But I'm not holding my breath, incidentally. So let's round the horn here. This is my IRT. There's no indicators on my charts or my book map either, except this is the mid. This is VWAP. This is the developing POC. Renko chart. The green lines are the IB. Naked volume point of control, whatever, right? These are the session prices, which are pushed over to bookmap. This is the NQ. Both of these, this tab is for the minis. This is for the NQ. This is my high time frame a micro composite chart. It's very simple. It's the RTH session only. Each candle is a daily candlestick. So each one of these represents what the hell happened in a day. As long as price is overlapping, I draw a volume profile around them, and that, by the nature of the way I have this set up, the volume profile set up, it automatically puts a micro composite VPOC and draws these red and green line at the these red and green lines at the low and high volume nodes of the current micro composite volume profile. Those red and green lines also push to bookmap. And this is the market profile chart. This is a kind of a round robin deal. Delta divergence. This is the ATR. This is volume, average volume, where we are, what percentage of over or under average volume for this time is of day. Harmonic rotations, the study, statistics study I've been trying to get figured out better. These are open interest bars, and this is the SPX. I also plot the exact same setup here for the micros. Yes, and NQ and that story. And then back to where we started. These session prices also push to bookmap. And the quote page here, we are still green across the board. We're at 1.41% up on the ES. Traded about 1.14 million contracts. So you just saw a minute ago that that's about 130% above average for the day, for this time. And I only plot the ES, the MES, gold, and the SPX and NQ and NASDAQ. Bookmap. Main platform I execute with. This is the micro composite. I enter these manually. These are the high and low volume nodes, which are pushed from IRT. This is the full session volume profile, which, as you can see, started plotting at 1700 last night and will continue through 1600 today. This is the RTH volume profile, and you can see clear as a bell where we opened, chopped around, Powell started talking, and it was a rocket ship. The minute they heard a positive, dovish kind of tone out of him, and I'm sure, because this was a keynote speech for a global symposium. This is not just our Fed that goes there every August to Jackson Hole. This is all the world financial hotshots and all the central bankers, professors, leading economists all go there for this symposium. You can see a string of singles here. That means over in the over the market profile, this is a string referred to as a string of singles, meaning it's just single wide prints, TPOs, and that's a big one. That's a long one. And then the balance of our volume and our distribution just filled in right up here at the top in a big P shape, which is by market profile speak, it is indicative of short covering. And that's not a surprise. We were short, and then, oh, good news. Stop, short covering, right? Market goes down to go up, goes up to go down, goes down to go up, goes up to go down, goes down to go up. That's it. That's how it works. It's just about that straightforward, too, to be honest about it. You need to always remember that the futures market is a zero-sum game. For every buyer, there is a seller. That's why they call them contracts. Not like stock, where there's a pool of stocks that you can buy or sell or borrow and sell. There is no trade in futures that for which there is not a buyer and a seller. That's the contract. So if somebody says, "Well, there's more, there's more sellers than buyers, that's why price went down," that's just, take that on board and weigh everything else they say from that point, knowing that they likely haven't a clue what the hell they're talking about, because that is fundamentally wrong. The market goes down by aggression. If the ask is more aggressive and they come across the market and come across the spread and hit the bid and keep doing that, we're going to go down. If the buyers are aggressive and come across the spread and lift the ask or lift the offer, we're going to go up. But there's never a case where there's more sellers than buyers. Doesn't happen. And if anybody says that's wrong or knows that's wrong or I'm not saying the right thing, throw something in the chat and we'll talk about it. I'm all ears. That's another important part about this whole stream is it's my virtual journal, and when I talk to, say, you or whoever, I'm talking to myself. So I have the benefit of knowing what I was thinking at the time. Who knows, 2 years from now, I look back at one of these things, I'll know. If I didn't narrate to some degree, I wouldn't know what I was thinking. It'd just be the chart moving up and down. Also, it's important to recognize that this is not a my way or the highway deal. This is the way I approach the market and the way I believe the proper approach to the futures market to develop and maintain a consistently profitable business. If you trade a blank chart with one candle chart or string of candles on it, and whatever it is you do is consistently profitable, by all means don't change. What are you listening to me for? You should be focusing on your stuff. And I am absolutely aware that there's a gazillion different ways to approach the market. Don't say anybody's right. I don't say anybody's wrong. Sometimes somebody will say something like a Martindale or something, and I know without question in my mind that is a guaranteed built-in account breaker. But, there you go. So those are kind of important, and I always approach the market that way. And, if you come here, realize that that's what I'm thinking. So at the moment, in order to have a statistically successful and profitable business, I realize that this is a random market, that the outcome of the next trade is 50-50, and that's a statistical fact. The market only goes up, it only goes down. Doesn't have any horizontal movement. We do that with time. Now, the next order of business that might have some impact on the market, not to interrupt, but is at 1450. That's the market on close and balance orders. So 50-50, right? And it is a random environment. My knowledge, belief, whatever you say, is that the correct way to approach it is to identify a setup that you feel like repeats itself frequently enough and with consistency so that it can be captured, and then determine the qualifying parameters and perhaps the trigger that would validate the entry for that. And you capture sample data set of that exact trade and specifics and criteria, and a large enough one that is statistically significant and outside the possibility or the probability of a random distribution. After you've, and everything, all parameters have to be the same. You can't have one stop at 3 points this time and one point stop at 5 points the next time and a profit target 1 at 5 and then 3 and then whatever, because they have to be apples and apples. I mean, I hope that's obvious. How can you do a statistical analysis if everything's not constant, it's all over the board, it doesn't work. So after you have captured that data set, you determine mathematically, statistically, does it have a positive outcome or an edge or an expectancy? Pick a word. And if so, then your mission as a trader is to trade that every time it presents itself in the live market. The law of large numbers will manifest that profit to your bank account. That is the exact business model of a casino. And from the trading world, it is the model that was realized and identified and then applied to the most successful trading and hedge fund businesses in the world. From Ed Thorpe to Jim Simmons and Ray Dalio, Paul Tudor Jones, Tom Sosnoff, or currently Tom the Trader with his, Best Loser Wins book, Tom B in the Trader's Lab, Rod in the Trader's Lab, or Static, us right down to this level. So it's not, the point of that is it's not something I cooked up on my own, or some fancy philosophy that I'm putting forth, and I'm certainly not trying to sell anything. The mentorship invoices will go out this next week. No. Not at all. So that's kind of where the whole stream is coming from. We are not much to talk about this afternoon, oh, come on, baby. There's our open. Zip, boop. There's the beginning of the Powell speech and the continuation of same. And then, some false flag operations on the part of the POTUS there, whether he's going to have a big announcement in the Oval Office. Turns out to be some crap about football, which is not crap, okay, but it isn't anything to make a kind of a I don't know how to say it exactly. You see big announcement from the Oval Office today. Well, that could mean I'm going to resign, I'm going to fire Fed Powell, I'm going to crash the market, I'm going to, whatever it is. Turns out it was something to do with FIFA. Well, that could have been in the description there, and it would have probably had caused less trepidation on the part of traders, myself included. I blew off the idea I was going to take a trade even after Powell, because that whole story with the administration and all of that, now I refer to them as random risk, because you don't know. And they can have a huge market moving impact. We're going to put tariffs every place, including on islands full of penguins. That was, where are we going here? Come on. That was, come on. We're gonna have the big, whatever the hell he called it. I forget. Some name he cooked up, which was a euphemism and certainly not the truth. I can't even, it's hard for me to even get it into the screen. Okay. There you go. There was that. And the bond market said, are you out of your freaking mind? And I'm going to postpone that for 90 days. And then we start back up. And now here we are over here. Market goes down to go up and goes up to go where now? Anyway, so that's the reason I'm real cautious, not political in any way, but it is a fact. When any of those people, there's only a few that seem to be pretty fond of their own sound of their own voice and certainly are not camera shy. When they get near one, they start talking, and you could have this. Or you could have this, like come on. Or you could have this like we had today, this was Powell, and there's really no impact that you can see in this candle from anything that came out of the Oval Office. So, and that's good. I'm not saying that's bad. I'm just saying that we don't know. That's why it's an unknown risk. And if you can't mitigate, you can't identify a risk, realize how to mitigate it, and then make a mitigation plan, it is a potentially unknown critical risk. And you have to be really aware of that, because your ultimate mission as a trader is to preserve your account. You do that through risk management. So there you go. Put the soapbox away now. It's the weekend. We're going to close her down here in, there was the 50. We went through the 50 and nothing happened. So that's typical. Hey, Panda. What's up? You're pretty Panda kitty. Our big panda cat has come here to make sure Dad's okay. What am I going to do? Okay. These are the market on closing balance orders. Now, this is pretty interesting here. I got it on the right screen. Yep, I do. Okay. This is 1,783,000,000 buy-side imbalance on the S&P 500 at close. 1,281,000,000 NASDAQ 100 to buy on the close. The Dow 589 million, Mag 775 million, all buy side. Stop and think about that. 1,783,000,000 contracts. You get some scope for how big this market is that we're playing in. How big the playground is here, or how deep the water is, I guess is a better way to look at it. Take 1,783,000,000 and multiply it by 12.5. That's how much those orders fluctuate per tick in dollars. I don't even know how to do that. I don't have a calculator right here. It goes to a billion, I'm pretty sure. You know what I mean? It's a number that I can't conceive of. Kind of like NVIDIA having 4.3 or something like that $1 trillion market cap. I can't get my head around a billion, never mind a trillion. Wow. Yeah, Panda. Okay, baby girl. Just a minute. She's getting upset now. She's going to need probably a snack or a petting. Stand by. Well, we are 5 minutes to the witching hour. Now let's take a look at something more uplifting here. Let's look at next week. Here are our reports for next week. There's Monday. We got building permits, new home sales. So we're off to could be a shaky start on Monday. Tuesday, durable goods. Ooh. Composite. What is HPI? I don't know what that is, to be honest with you. Huh. And consumer confidence. That's a biggie. And a note auction. Wednesday, the usual crude and a note. Continuing jobless claims, core PCE, GDP. Thursday's a big day. And Friday, Friday we've got the core PCE and PC price index. Chicago PMI, that's a big one. The Michigan consumer expectation, that's a big number. For some reason, they always put it at a 2-star, and it always moves the market. Don't know why, but trust me. So next week is a pretty big deal in terms of numbers, and I think this one right here. $4.34 trillion market cap. Isn't that something? We got whoever the hell PDD Holdings is reporting on Monday, and then nothing on Tuesday. Wednesday we've got NVIDIA, and then CrowdStrike. Maybe they're going to break all the airlines again. HP and, then Dell and the computer guys down the road. Wednesday is going to be huge for earnings. So Wednesday is going to be a big day, right? We got NVIDIA earnings, and the way these work is the half moon is at night after the close, and the little sun, wherever that went, is before they open. There you go. Economic calendar we have here at, come on. Wednesday. Well, Wednesday's pretty good because Wednesday's light numbers. There's basically no numbers. Crude inventories is every Wednesday at 9:30, and it's now given the political situation with Russia and Ukraine, etc. Oil is impossible. It is fairly volatile, and it's a 3-star event, but it doesn't really move the S&P much. So there's that. So the big hammer is after the close on Wednesday is NVIDIA. Okay. So I can't imagine that Agent Orange and the critical risk band are going to be taking the stage anymore this evening or this afternoon. Looks like not. That's good. We've run through the numbers and around the horn here, and that's pretty much under control. We know what the day was, and it's pretty much it. You see the liquidity packing in here now at the close for the close. Pretty clearly the P-shaped profile, well above all this string of singles. So I hope you had a great trading week. A couple of other, just, off the top of my head. We grow up typically, I don't know how, obviously I don't know how old anybody has been me. Most people I know, including especially myself, grew up with a strong work ethic and the concept that you are entitled to or you earn commensurate with the effort you put in. In other words, how hard you work. That is absolutely contrary to trading. They have nothing to do with each other. In fact, the more you trade, the more percentage of time you have risk on in the market, unless you're really well disciplined with statistical vetted trades, a probability you're going to lose a lot more money than you make. Much better approach to minimize your risk exposure to the market with specific A-plus setups that you have vetted and you know the edge, and let them make a substantial risk to reward return. You want to risk $1 or a point or 10 points to make 30. You want to do 1 to 3, something like that. That way you can compound your account and grow it and get through swings, drawdowns, which will absolutely happen. It's the nature of statistics that you can get 2 or 3 or more of the same outcome absolutely normally within a random distribution. And so you could get 3, 4, 5, 10 losses in a row. You need to know that your probability and your expectancy is such, or that your risk, meaning your trade size and the amount of money you risk per trade, is such that you could survive that. Because what good does it do you if you have the most fantastic setup and strategy in the world and you blow up your account? You can't trade tomorrow. That's the way you have to look at it, in my opinion. So manage your risk, limit your risk exposure or the amount of risk you expose in the market. Trade A+ vet whatever setup it is you choose. TLab people or whoever's here will recognize VPOC migration, the IB setups, the mid or VWAP, VPOC. These are all ones that are talked about frequently over there and in here sometimes also. Pick one and then vet it. And do it really. Do it with discipline. I only, for now more than a month, I only have taken one of the 2 IB trades in a day. I'm not going to be doing anything else. And also, I'm not going to be taking an IB failure trade right here at 4:50, at 4 o'clock or 2 o'clock in the afternoon or something like that. I don't think that that's very high probability either. So I want to try to group my trading into the RTH 1 session. What we did, or Rod did, was just took the number of hours and the minutes in the day in the trading in the RTH session divided by 3. And if you do that, you'll find that at 150 minutes is each one. Now, Rod cut it off a little earlier. Instead of 1600, I think he went to 1515. So RTH 1 over there is from 8:30 until 10:45, which is, if you just divide the exact amount of minutes in the trading day from 0830 to 1600, unless I'm wrong when I did it last night, doing some stuff else, it was 150 minutes. Whatever it is, I try to keep it in that first period, that first RTH period. So there you go. Have a great weekend. Here's something else that's important. Your physical health, your emotional health is really important to trading. If I'm on tilt for any reason, fight with, somebody, or drunk and hungover, or, sick, I don't trade. You need to be hydrated, healthy, rested, on an even keel emotionally to view the market properly and make intelligent decisions. It's no different than flying a plane, or I guess people can drive a car pretty much on tilt, most of them, but you don't get hammered or have a fight with your wife and then jump in the cockpit of a plane and take a couple hundred people for a ride. I mean, there's reasons why you don't do that. And that's the same way you should approach trading. Also, one more thought while I'm on that, got the man soapbox out here. This whole conversation about trading psychology and, oh my God, how can I stop over trading and all this kind of stuff. First of all the books about that are written by intelligent, well-meaning people like Steenbagger and everybody who make money by selling books. So bear that in. I approach that whole thing with two major points. Number one, your brain has developed, and our monkey mind has developed over at least thousands of years, maybe millions, depending on which way you believe things got started in evolution. And early on, we developed many skills to keep ourselves alive and to be, and by doing so, those skills and those tendencies were passed down through generations. The people that didn't do it right were somebody's lunch. So that didn't get passed on. You're never going to get rid of that. It's cooked into you. Any of those feelings, FOMO, fear, greed, revenge, I don't know, a host of others, I suppose, but in our world, those are kind of the biggies that normally are a boogaboo to people, and I wish I could do. You're never going to get rid of that. What I believe you have to do, and it's easy, recognize that. Acknowledge that, oh, hey, Hyde, hey, FOMO, what's happening, buddy? And don't act on it. Oh, I'm having FOMO now. Oh, I'm pissed. I want to get even for that loss. And recognize that, and then don't act on it. Let if you need to put the mouse down and push back, I stand up all day, so I have a standing desk, so I can't push back in the chair, I'd fall over. But, whatever you need to do that. And the second thing that I really believe that is probably pretty controversial compared to all you hear about psychology and the books and everything else. Be an adult. Oh my God, how can I get over? I just can't stop myself from over trading. Really? Do you go to the bathroom in your pants too? Well, you don't. Okay, well then you don't overtrade. I mean, come on, be an adult. I don't overtrade because I know it's not the right thing to do. I also don't go to the bathroom in my pants. I know that's maybe a little coarse, but that's the way I look at it, and I think it's that plain. Do you get shit-faced, falling down drunk, and throw your family in the car and go for a ride? No. Most people with common sense don't. Oh my God, how can I stop driving drunk? Same thing as how can I stop overtrading? Same exact thing, in my opinion. You're an adult. You act like an adult in probably every other aspect of your life. So there's no reason not to do so when you're trading. Have a great weekend. And having said all that, have a great weekend. Do something healthy for yourself. Rest your eyes. Go for a walk. Get outside. Get some fresh air. Get away from the screens. Get back on next Monday. Or if you just are an obsessive compulsive, the market's open at 1700 on Sunday night Central Standard Time. With that, have a great weekend, and I'll see you next week. Thanks for stopping by. Smack the thumbs up on the way out the door. And all the best, yeah? I wish you the best of luck, really.